Of $64,000 ahead of Coinbase listing today. Good morning, everybody. Welcome to the second hour of the program. 20 seconds to go until the start of the European equity trading session. And this is what futures are telling us we're likely to see. Some outperformance in Paris, some underperformance in London seems to be one of the themes. It's been something of a theme all week. And as we just got the numbers through from LVMH just last night, smashing expectations in the words of one broker, according to Danny Berger, we see that expectations are high in Paris that we will see some gains for the luxury sector. So that's part of the story. We saw London weighed down by a mixture of sectors yesterday. It was the banking sector, it was oil, it was also the drugs names as well, and it wasn't just AstraZeneca, it was Glaxo as well. So the sector makeup not helping London right now, it seems. This is where we are then at the start of the European equity trading day. European equity markets opening, well, we've only got London so far open, but London is flat, fairly flat. Now Paris is open, up by 0.5% in this morning's session. So as expected, moving to the upside a little more aggressively. We've got some opening prices on some of the names we've been watching. So LVMH is up by 2.5% or so, 2.4% to the upside. In London, we had some numbers out from Tesco, and that stock is weighing actually on the market right now, down by 1.8%. EasyJet up by 1.9% on the back of an announcement on profit guidance from that particular business. So we're just keeping an eye on some of these individual names and indeed how these broader markets open up. We have the IBEX and the FTSE MIB both opening tentatively to the upside, waiting for the DAX to join the fray this morning. So European equity markets opening just slightly to the upside. The US has seen prices increase by the most in nearly 9 years, but investors are shrugging off rising inflation and focusing on the global vaccination campaign. That's as Johnson & Johnson's vaccine has been put on hold in the US after 6 women developed severe blood clots. J&J has also decided to delay its rollout in Europe. Joining us now is Viraj Patel, Vanda Research Global Macro Strategist. And with all of that in mind, Viraj, I just wanted to start the conversation with your take on risk appetite right now, because on the one hand, you've got inflation building in the US. Maybe building is the right word, though, not running away with itself and scaring people unnecessarily. But at the same time, you have the negatives coming through from, so that could be a negative, and you also have the negatives coming through from the pause in the J&J rollout. None of that seemed to stop US stocks in their stride yesterday. What do you think is powering ahead global risk appetite at this point?
So we think that we're probably going to hit a pause button on the first quarter themes that were driving markets, and April will probably be about consolidation, and one of the themes will be consolidation in global yields, and really twofold here. We're starting to see, especially in treasury yields, value investors starting to come back into the market and buying at these levels. And also, we also think that in the short term, we will hit peak inflation uncertainty. So as we saw with the readings yesterday, we'll get more readings both in the US and Europe on inflation over the next couple of months. And really, that will probably give a reality check on how modest underlying inflation pressures are, how far central banks are realistically away from tightening in the near term. And that really points to really good consolidation in yields and in our view, a good environment for growth stocks in the short term.
Okay, so you don't think we're going to see inflation prints that are going to scare risk appetite, that are going to cause a sell-off in stocks? I mean, we certainly didn't see that in yesterday's session, Viraj. Is that your expectation? And so with that in mind, where do you put, and if we see a pause in yields, where does that put the dollar? Because you have been pretty bullish on the dollar.
Yeah, that's true. I think, again, with the dollar, we've been on the right side of that call since the start of the year, partly a positioning story and a short squeeze, but also partly a Fed repricing. We don't think that narrative's fully gone away this year. In 2021, we're probably going to see a pause and a consolidation. I think when it comes to the FX markets, there's two, obviously, stories. One that we're focusing on, which is just the strength of cyclical recoveries going into 2021, 2022, and also the proximity of central banks tightening in the near term. And both for the dollar look pretty good. The scorecard looks good here. And for us, I think it's just hitting the reset button in April, but looking to go long dollar again against some of the low-yielding currencies once we get better entry points.
Yeah, and so you think that it's still going to be relative expectations around the Fed and the ECB and the path to tightening, the number of months before tightening starts. You think that's still going to be the guiding force when it comes to the dollar and the euro, Viraj?
Exactly. I think it'll be short-term divergence between the Fed and the ECB. We think that will be the case. I mean, based on our estimates, the gap between the Fed and the ECB's lift-off is around 12 months. That probably looks slightly too aggressive, especially on the ECB side. So we see room for a pushback there in the short term, coming from the ECB, coming from weakness in the European macro story. And then therefore that's a slightly constructive view on the dollar against the euro. We had a 117 target. We hit that. Once we get a bit of consolidation, we probably think the risks are for another leg low in euro dollar down to 115.
Viraj, thanks very much. Viraj Patel, Vanda Research Global Macro Strategist. He stays with us on the programme. We'll get further thoughts from Viraj. Coming up, the ECB can exit from its crisis measures while maintaining accommodative monetary policy. That is the view of the Bank of France Governor, Francois Villeroy de Gallo. We spoke to him a little bit earlier on. We'll play you some of that conversation coming up shortly. And later today, a crucial central banking conversation. Fed Chair Jerome Powell speaks at the Economic Club of Washington. He'll be talking to David Rubenstein. Don't miss at 5 p.m. London time. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
Welcome back to the European market open. 8 minutes into a trading session that shows some divergence between London and Paris. Certainly, we see the Paris market doing very well. The London market down by 0.1% this morning. Let's take a look at some of the stocks that are on the move. And just a glance to my right tells me that Danny Berger is going to help us understand a little bit that divergence between London and Paris today. Danny.
Yeah, I've got you covered, Anna. LVMH, really the entirety of the luxury goods space after what Bernstein called a smashing quarter from LVMH, beating expectations, thanks to Louis Vuitton, thanks to Christian Dior. But we're also seeing Kering do well. We're seeing Moncler do well. So all of those stocks really aiding the Paris market. Now, also on the rise today is EasyJet, out with their earnings figures. Cash burn looking better than expected. The entirety of the first half looking better than expected for EasyJet, despite the fact they say for the third quarter capacity only going to be at 20% of what it was pre-COVID. Still, that's allowing shares to go up 3%. Finally, I did want to get a check on Credit Suisse. We learned that on Tuesday, they had another $2 billion they put into the market of Archegos-linked block trades. It's probably somewhat concerning to investors that they're still getting rid of their exposure. You know, the U.S. banks, they did it really early on, but Credit Suisse still really lagging here at the moment, so down nearly 2%. Finally, the macro picture. Look, we had that CPI data out yesterday, but I was speaking to Jim Paulson, CIO of Luthold Group yesterday, who said, you know, we have these base effects, which means we're not going to see inflation or get any hint of it until later in the year. So perhaps that sort of shows that while, yes, you know, U.S. 10-year yields up about a basis point, we're not getting any sort of huge reaction. But those higher yields also mean somewhat of a soggy dollar. We're also looking at Bitcoin hitting another high over here, up over $64,000. We have the Coinbase direct listing. That doesn't seem to be moving investors away from Bitcoin. Instead, only seems to be adding to the exuberance for the cryptocurrency, Anna.
Yeah, we'll certainly talk about that in the next half hour of the program. Danny, thank you very much. Danny Berger with the latest of your movers and some of the big macro themes. Let's get a Bloomberg First Word News update. Some of the top stories we're covering this morning with Laura Wright.
Thanks, Anna. Sources say President Biden is set to withdraw all U.S. troops from Afghanistan by September 11th. The target date marks the 20th anniversary of the terrorist attacks that led to the U.S. invasion and the toppling of the country's Taliban leadership. Some forces will start leaving before the end of this month. The UK let a top civil servant advise Greensill Capital while he was still working for the government. It comes amid a scandal over lobbying and cronyism surrounding the insolvent lender, including by former Prime Minister David Cameron. He's been cleared of breaking the rules, but the government had announced an inquiry into how Greensill won contracts. The white police officer who fatally shot a black man during a traffic stop in a Minneapolis suburb has resigned, as has the city's police chief. The mayor says he hopes the moves will help heal the community and lead to reconciliation. It follows 2 nights of protests and unrest. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. Let's focus on Europe now. And we've been speaking to the ECB Governing Council member, Francois Villeroy, about the EU's Recovery Fund.
If I look at the future, obviously we should implement swiftly the so-called next generation funds, the 750 billion package. And I think that speed is still more important than weight. To answer your question, it should come as quickly as possible. There will be also fiscal stimulus from national states. We should never forget them. The bulk of fiscal stimulus, it's still at national level.
His interesting thoughts there on the fiscal side. We also discussed when he saw an end to the ECB's pandemic bond buying program.
The crisis phase could be over by March 22. So we could possibly exit PEP by March 22, PEP net asset purchases. It would not mean an abrupt tightening of our monetary policy. Reinvestment under PEP would go on.
Viraj Patel, Vanda Research Global Macro Strategist, is still with us. And Viraj, we touched on your expectations for ECB tightening versus Fed tightening in our earlier conversation. Interesting to hear the Bank de France governor there talking about how policy will remain accommodative even when the PEP program comes to an end, because there will be other tools to fall back on. What are your expectations?
In reality, we still think the ECB is the only game in town in terms of stimulus and marginal stimulus over the next 12 to 18 months. So the reality is you probably want to be on the dovish side of that trade, and that March 22 date that was cited gets kicked back a bit, given what we're seeing in terms of headwinds in the short term, especially around vaccinations, reopening, and also I think markets are probably misjudging a clear narrative that will emerge in the next second half of this year, which is Europe's recovery will clash with what is likely to be a pretty busy political calendar in Europe in the latter half of this year. So all of that for us, pushes us on the cautious side of things, and for the euro as well. We just see the front end rate staying very anchored lower. We actually think April's a good month to be tactically long bullish on bonds.
That's interesting. So you think because of the delays to the recovery, it's going to clash with some politics in the latter part of this year, and all of that is going to weigh on your expectations. So for that reason, do you not then chase the recovery story, the catch-up story for European assets?
Yeah, I think that's a good question, and to some extent we have to ask how much of that the recent weakness has actually been priced into markets. For example, in equities, we actually think it's a lot of the good news is actually priced in already. If you look at the first quarter sector dispersion in performance, most of that's been driven by upgrades in earnings estimates, especially bank stocks and auto sector, and both of those do really well under the reopening and value theme. So, to some extent in the European equity market, a lot of the good news is priced in. Maybe on the FX side and the bond markets, there's discounting more of that. But when we look at positioning in particular, the euro-dollar positioning across bonds, which is extremely short, one of the most crowded short positions in our Vander models, we think that both of that doesn't really fully discount the bad news in Europe that's likely to emerge over the next couple of months, and for us that trade still is pretty low.
What's in the driving seat for the pound right now, Viraj? The history is well known. We came through some big uncertainties around Brexit. Those have been navigated, of course, but other big uncertainties could lie ahead. You cite the Scottish independence polling, of course, and we have local elections, Scottish parliamentary elections coming up in May. With all of that in mind, then, what is going to be in the driving seat? Because of the recovery from COVID, also very much at the heart of things for the UK currency.
Yeah, while the start of the year looked pretty good for UK reopening stocks and sterling, partly as we had tailwinds from the vaccination progress, Brexit trade deal, also valuation. But we're starting to see some headwinds. So it's almost as if the tailwinds will clash with some of these headwinds in the next couple of weeks and months, especially ahead of those local elections next month. And we will hear and see more talk of Scottish independence, and that for us puts a dampener on the top side for sterling. But overall, we're still pretty constructive. Those tailwinds I mentioned are still pretty much in motion. But for us, it's more consolidation and looking for better entry points to go long sterling and long UK again later this year.
Yeah, well, where do you stand on the long UK stocks argument then, Viraj? Because a number of people told us they were undervalued earlier on this year. Are they still? We see the FTSE 100, and I know that's not a true reflection of the UK economy, but that's sometimes struggling against continental peers just this week. What are your thoughts?
Yeah, our favourite way to play that has been the FTSE 250 on a relative basis. That outperformed really well year to date, and I think we do think there's probably going to be some profit taken there given the domestic headwinds in the short term. But that reopening trade should, if reopening goes to plan, still be live in the second half of this year. I think we just need some fresh catalysts. So for us, there'll be a premium on monitoring data in the next couple of months. And if we do, there are two-sided risks. There is the risk that we get an upside surprise coming from the reopening, coming from macro data that causes another positive revision to the UK outlook. And that for us is good for UK domestic stocks and also sterling.
Viraj, thank you very much. Viraj Patel, Vander Research Global Macro Strategist. Viraj will be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time. Still to come here on the programme, Europe and the US have paused use of the Johnson & Johnson vaccine over fears the shot could cause fatal blood clots. We'll get the latest next. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The FDA is the gold standard for ensuring the safety and the effectiveness of the vaccines, and today's action, I think, is clear evidence that they're taking every step necessary to ensure the American people have clear and transparent information.
We expect it to be a matter of days for this pause.
We want to get this worked out as quickly as we possibly can, and that's why you see the word pause. In other words, you want to hold off for a bit, and very well may go back to that, maybe with some conditions or maybe not.
The real thing that is so notable here is not just the cerebral venous sinus thrombosis or the thrombocytopenia. Those two things can occur. It's their occurrence together that makes a pattern, and that pattern is very, very similar to what was seen in Europe with another vaccine.
Some of the voices of health officials as the distribution of Johnson & Johnson's vaccine was paused across much of the US and Europe. Let's get analysis now. Sam Fazeli, who leads our pharma coverage for Bloomberg Intelligence, I'm pleased to say, joins us now. Sam, good to speak to you. And this was not a surprise to you, I assume, because we talked about this just yesterday. We talked about how this could be the case, this could be possible because of the similarities between parts of the Astra vaccine and the Johnson & Johnson vaccine. How much of a setback do you think this is going to prove to be, Sam?
Good morning, Anna. I think the regulators in the US are worried that the incidence of this side effect may end up being similar to that's seen with the AstraZeneca vaccine, which, depending on what numbers you read, etc., you can say it's at about 1 in 100,000 and not 1 in a million, which is what the U.S. authorities are seeing at the minute with the Johnson & Johnson vaccine. So the numbers could get worse, and therefore I think they've done what they had to do, which is their job, is to protect the public from a risk that they can't assess at the minute. For the U.S., this doesn't really mean much, Anna, because they have a lot of, they're awash with the mRNA vaccines. It's more an issue for Europe and the rest of the world.
Yeah, so Europe more reliant on this, perhaps. Are we going to end up in a place where we get the same, or not the same, but a similar strategy with some age-specific recommendations, maybe in parts of Europe that are more reliant on Johnson & Johnson? Are we going to get age-specific recommendations, just as we've seen for AstraZeneca?
Yeah, I think you'll probably see that in the U.S. too. I think they'll get some more data, potentially the next week or two, reassess the situation to see whether it is similar to that with AstraZeneca that seems to be more prevalent in the younger age groups, and go with that recommendation. Then what happens in terms of vaccine hesitancy as regard, I mean, that's a big phrase, but what happens to people wanting the shot or not, if they have the option of another vaccine, then that's a different discussion.
I suppose, I mean, every scientist who's working on this, Sam, and that is many, all trying to understand what link, if any, there is between these vaccines and blood clots. Are we any closer to understanding what it is about what seems to be women of a certain age that makes them more vulnerable in this regard, even though the numbers, the case rate is very low, as you've pointed out?
Yeah, Yeah, I'm not going to go down the road of saying this is a woman versus a female versus male issue. The MHRA and the European authorities have all been very clear, saying that they don't seem to think there is a gender difference here, and therefore 6 cases in the US happen to be in women. It could just be statistical fluke. So let's wait on that one. But in terms of what's doing it with these vaccines, I think it's very clear that it's pointing to the virus they use to deliver the vaccine, as opposed to, obviously you don't see it with the Pfizer, BioNTech or Moderna vaccines, and they've confirmed that. So I think we need more information to understand why these viruses are doing that.
And you've mentioned how this could be more difficult for Europe, Sam, because of fewer alternatives, perhaps, and certainly for the European Union, that seems to be part of the story right now. How much of a delay, how much of a setback then is this for the rollout of vaccines, which have already been set back within the EU fairly substantially?
Yeah, so we don't have clarity as to the timing of the expected delivery of doses, but there are, if you look at the European Union contract, which they publish on a website, there are up to 900 million doses of the mRNA vaccines contracted. But that's 450 million people. That would cover the European Union population. The question is, I don't know when they're due, and some of them are options, and some of them I know are due in 2022. So if the J&J vaccine isn't reintroduced, which I doubt, it will probably be the same as AstraZeneca for the older population, then you do have a slowing of rollout as opposed to a major, serious roadblock, which I think some of the rest of the world could suffer.
Okay, Sam, thanks. Good to speak to you. Thanks very much for bringing us your thoughts. Sam Fazeli from Bloomberg Intelligence. Coming up on the program, will the listing of Bitcoin trading platform Coinbase be enough to prove that cryptocurrencies are here to stay? What does this do to the ability of investors to get exposure to Bitcoin? Maybe the more risk-averse investors, does this open up another opportunity? How do you value an exchange like this? How do you value this kind of exchange versus other more typical equity bond market exchanges? So lots to talk about then. Matty Greenspan, Quantum Economics CEO, joins us next to talk all things crypto. This is Bloomberg.
That Norway sells way more electric cars per capita than the US? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other. In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice-cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. Half an hour into a trading session that looks like this. The London market and in fact, the Frankfurt market underperform today. We see outperformance over in Paris. The CAC 40 up by 0.25%. So net, we're flat on the European equity market picture right now. US futures fairly flat as well. US futures either side of the flat line this hour. Let's have a look at the sector breakdown and see where we are as things deteriorate just a little bit here on the European equity market picture. This is what we've got for you from a sector perspective. We've got consumer products and services moving to the upside. That is the best performing sector. Technology also moving a little bit higher. SAP is one of the names moving higher in Germany. That's up by 3.4% in the tech space, given what they've had to say about cloud. On the downside, we have telecoms, construction and insurance, auto and parts, also a weight on the German market then. That particular sector down by 0.4%. Just looking for where luxury features, and certainly we've seen some individual names in the luxury space moving to the upside, and that is lifting Paris. The likes of LVMH up by 2.6%. Let's get a Bloomberg Business Flash. For that, here's Laura Wright.
Thanks, Anna. Luxury looks to be defying the pandemic gloom. First quarter sales at LVMH soared, surpassing the level seen in 2019. Revenue at the fashion and leather goods unit jumped over 50% from a year earlier. That division is a key driver for the company, benefiting from the growth of brands like Christian Dior and Louis Vuitton. Sources say Credit Suisse has unloaded about $2 billion of stocks tied to the blow-up of Archegos Capital Management. It follows a frenzy of similar transactions that have raised almost $200 billion in market value. According to analysts at JP Morgan, the downfall of the firm will result in $10 billion of losses for banks. A reshuffle at the top of Toshiba is casting doubt on a potential buyout plan. The Japanese company's chief executive is stepping down and being replaced by the firm's chair. It comes amid resistance to the over $20 billion buyout offer from CVC Capital Partners. Sources tell Bloomberg KKR is also exploring a bid. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Now, cryptocurrency platform Coinbase will list on the NASDAQ today. The direct listing could value the exchange at around $100 billion. But will it be enough to convince Bitcoin skeptics? Joe Wiesenthal has been taking a look at how far Bitcoin has come.
Coinbase is going public, but it's not just another direct listing. It's a symbol of how far crypto has come and its increasing institutional acceptance. Think about it. Bitcoin has been around since 2009, and despite sustained rallies, the mainstream basically always viewed it with extreme skepticism.
This was the biggest Ponzi scheme in human history, and it's going bust.
Bitcoin, which in our view is nothing else but a Ponzi scheme.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day.
I think it's a scam for criminals around the world.
It's an index of money laundering.
Fast forward to now, Bitcoin has more than doubled just this year, and it's up more than tenfold since its lows last March. And now with the total cryptocurrency market worth over $2 trillion, the large institutions are ready to play a role.
Bitcoin should be worth about $400,000.
Coinbase is the largest U.S. cryptocurrency exchange, and investor interest is massive. In fact, it's so big that despite being less than a decade old, the company is, by some measures, larger than established exchanges like ICE or NASDAQ.
I think that there are many that are sort of standing outside the gates, just waiting for that moment when they can have exposure to Bitcoin.
Coinbase generated revenue of $1.8 billion in the first 3 months of the year and had 56 million verified users in the quarter. The numbers don't lie. Crypto seems here to stay.
That's the history, that's the story. Joining us now, Matty Greenspan, Quantum Economics CEO, and sometimes we often talk to, somebody we often talk to about all things crypto. Matty, good to speak to you. Do you think this is a coming of age then for Bitcoin, a coming of age for cryptocurrencies as we see Coinbase listing on the NASDAQ?
Yeah, it's certainly a huge step forward for the industry and the legitimacy that it brings to in the eyes of investors, in the eyes of global regulators, no doubt.
So some added legitimacy. Does this bring new investors, more risk-averse investors? One of my colleagues, Eddie van der Veld, has been talking about how more risk-averse investors who like to do fundamental analysis might have more luck trying to value an exchange than they do trying to value a cryptocurrency using those more traditional metrics. Is that something that's going to widen the appeal then of this asset as we see this IPO?
Yeah, as usual, Eddie is right. I mean, it's very difficult sometimes to evaluate cryptocurrencies because they don't have, the usual earnings or price-to-earnings ratios or quarterly reports and things like that. The way that we usually tackle it is kind of by measuring the size of the network and measuring the rate of adoption. So having, of course, a exchange of this magnitude being listed publicly on the NASDAQ is going to certainly give many investors a new way to gain exposure to the rapidly rising crypto market without necessarily having to go through all of that homework to try and figure out what a cryptocurrency should be worth.
What does the regulatory backdrop and regulatory protection look like, though, surrounding crypto assets, Matty, at this point? I understand that a number of ETFs are being assessed, so they might be coming to market, and here we have the listing of Coinbase. Does this signal some tolerance by US regulators, or do you think there could still be regulatory headwinds?
Yeah, so U.S. regulation on cryptocurrency is notoriously behind the curve when compared to the rest of the world, and they seem to be kind of going in two directions at once. So in the one hand, we see this Coinbase listing, which is quite large, and as you mentioned, several ETFs pending approval of the new SEC chairman, Gary Gensler. On the other hand, we also see the persecution of projects like XRP or Ripple Labs and Libri. In both cases, my team and I fear that should the SEC win the ruling, it could set a very, very nasty precedent, which would basically drive all innovation, especially within the digital space, but innovation at large outside of the United States.
How big should we see the growth opportunities for Coinbase as, Matty, a business such as this? The CEO putting out a blog post just overnight saying that Coinbase has an ambitious mission to increase economic freedom in the world. Everyone deserves access to financial services that can help them build a better life for themselves and their families. Is this a freedom that some foresee and others don't know they need yet? I mean, how big should our expectations be for businesses such as this?
Right. Well, the fact that the expected valuation of 100 billion, I mean, that's about 4 times the size of the NASDAQ itself on which it's being listed. So, I mean, that should give you kind of a sense of how people are looking at this, and how do we kind of evaluate anything these days? And when we see the ridiculous valuations of Tesla and GME, I think one of the keys here is the fact that it's going public as a direct listing rather than an IPO. Meaning that there are no underwriters involved with setting the price, and there's no new shares being issued. It's simply the shares that are already issued coming online. So in a way, the Coinbase valuation is a lot more like a cryptocurrency than a stock in many ways. Because we're talking about a limited supply, and basically the seller gets to choose their price in these situations. Within the decentralized market, I mean, there's also a futures market within the crypto space, which are selling tokenized shares of Coinbase already, and they have the valuation closer to 140 billion. So certainly a lot of hopes. But what you mentioned there, Anna, as far as Coinbase's mission, I mean, this is the mission of Bitcoin and cryptocurrencies at large, the democratization of finance. And it's very difficult. Obviously, with the first quarter was a blowout for Coinbase, as it was in the entire space. But we don't really see Coinbase specifically having this kind of moat. I mean, obviously, there are many different risks, and we foresee the massive rise of cryptocurrencies only to continue.
Okay.
The question in my mind is if Coinbase is going to maintain that market share.
But what, Matty, about ESG-minded investors and the environmental toll that Bitcoin and the mining of Bitcoin takes? I was looking at some research by Citi. Bitcoin power consumption increased by 66-fold, 66 times since 2015. A lot of that powered, of course, by mining taking place in China, coal-fueled mining of Bitcoin. How does this sit alongside those kind of mandates?
Yes, well, unfortunately, I'm not the expert in Bitcoin's power consumption. We do have a member on our team who delves into that a little bit deeper. Generally speaking, we need to, when we compare that, of course, to the U.S. dollar-based system, well, let me be straight with you. It is a problem, and I believe that over time, certainly there are incentives for people to use renewable energy, and cheaper energy sources. But I do believe that the network will evolve, and have faith that by the time it gets to be a bigger problem, we'll have more solid solutions as far as Bitcoin mining.
Okay. Matty, thanks very much. Thanks for coming to talk to us. Matty Greenspan, Quantum Economics CEO. Thanks for spending time with us. Coming up on the programme, stopping inflation contagion after raising rates by the most in a decade in March. Brazil's central bank chief says they could go even higher. More from that exclusive conversation next. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy, and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Welcome back to the European Market Open, 43 minutes into Wednesday's trading session. Things fairly muted here on European equity markets. US futures flat to positive this hour. The head of Brazil's central bank says it was forced to intervene and tighten monetary policy last month as spiking energy prices accelerated inflation. Despite raising rates by the most in a decade in March, policymakers say they could go higher. Bloomberg spoke exclusively to the central bank's president, Roberto Campos Neto.
We look at what needs to be done in terms of adjustment of inflation, recognizing that part of it is temporary, and we think towards the end of the year the inflation is going to go back lower, and we think we are adjusting rates so that we have our target. And by the way, when you look at the output gap, we also see a convergence in 2022. So those things are aligned.
But you're not planning to take the neutral rate, go back to the neutral rate this year, right? You're still planning to leave some monetary stimulus for 2021.
Yes, no, the question in every meeting, the first question is, do we need stimulative conditions? And the answer is yes, we do. We're still facing a pandemic. We're still facing a country that has many problems. So we do think stimulative conditions. Then the question is, how stimulative they need to be? Remember that when we placed interest rates at 2, we were envisioning a scenario that never happened. People were talking about negative growth in the magnitude of 8-9%. Some people were saying inflation was going to be as low as 1.5%. None of these things materialized. So it's not adjusting inflation for what we think it should be compared to the neutral rate. It's recognizing that the interest rate that we have now was set up for conditions that never materialize, and that we need to move rates but still be on stimulative grounds. And that's why we mentioned the partial normalization process.
That was the Brazilian central bank president, Roberto Campos Neto, speaking exclusively to Bloomberg. Let's get the latest in the sell-off roiling the world's second largest credit market. Mounting concerns about the financial health of China Huarong Asset Management are fueling a record tumble in the company's dollar bonds. Huarong is a distressed debt manager controlled by the country's finance ministry. Let's get the details from our China credit reporter, Rebecca Chung-Wilkins, who's with us. Rebecca, good morning to you. Thanks for joining us. So why are investors panicking about Huarong if this is state-backed? Perhaps the working assumption in the past would have been that there's nothing to worry about here. So what's the concern?
Yes, this is a really extraordinary story of mounting stress at, as you say, what is one of China's most important central state-owned companies. Huarong first stoked investor concern when it delayed the release of its financials due March 31st, and that led to questions over the viability and the visibility over the group. However, as time has gone on, there have been reports of a potential restructuring and a kind of deafening silence about whether or not the state will step in to prevent investors taking a haircut or to help the firm in any way. And that has essentially prompted questions about the extent and scope of any support from the government. And it's worth bearing in mind here that this is an A-rated investment-grade borrower. It's considered a sort of quasi-sovereign by some. And it's really popular among kind of institutional investors historically. And the bonds are now trading at junk levels, so somewhere in the 60, 65 cents on the dollar range. So it really is a very dramatic reversal of fate for this company.
And so, Rebecca, what signs are there of broader contagion in the markets, and just how concerning could things become? Is this something that is going to have a broader reach into other assets?
Well, we're definitely seeing it impact other areas of credit so far. There's been a fairly sharp sell-off across China's investment-grade and high-yield dollar bond markets as investors are moving to pair risk quite quickly. Asia's investment-grade dollar bond market is also taking a hit again this morning, spreads moving wider. What's interesting, I think, is in the primary market, sources have also confirmed that Tencent is holding off on a potential $4 billion bond deal, which was meant to price as early as today. Now, spreads on Tencent bonds are at kind of the widest in about 3 months, as this sort of stress from Huarong is spilling over into the rest of China's credit market. And, you know, investors are watching the primary market very, very closely, and that there are any signs that the crisis at Huarong might free up issuance for other borrowers as well.
Okay, Rebecca, thanks very much. Our China credit reporter, Rebecca Chung-Wilkins, thanks very much for talking to us. A really interesting story around Huarong and the implications, or the impact, sorry, that might have on other assets. We'll keep watching that one. Coming up on the programme, the hawk has left the building. We speak about the impact on sterling after the Bank of England's chief economist and inflation hawk, Andy Haldane, announced his plan to step down in June. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
My message to the American people on the vaccine is, I told you all, I made sure we have 600 million doses of the mRNA, not of either Johnson & Johnson and or AstraZeneca. So there's enough vaccine that is basically 100% unquestionable for every single solitary American.
President Biden speaking yesterday, reassuring Americans that the U.S. has enough vaccine supply after the FDA hit pause on distributing the Johnson & Johnson shot. 52 minutes into our European equity trading session, markets yesterday seemed to take that in their stride, really. Johnson & Johnson news, certainly, and focus, as the president did there, on the fact that the U.S. at least has plenty of other options when it comes to vaccines. A little more tricky here in Europe, certainly parts of Europe more reliant on J&J than the U.S. is going to be. But this is the picture across European equity markets right now. We're fairly flat, either side of the flat line, pretty much relying on Paris for some of the gains this morning. Laura Cooper, Bloomberg's Markets Live macro strategist, is with me on set this morning. Laura, good morning to you. Good to speak to you. So we see here the same pattern that seems to be emerging day to day this week, where the London market underperforms and the French market outperforms. It seems to be today about luxury and about LVMH and that side of things. I suppose it's the sector makeup of these various markets that's weighing in favor of Paris and against London at this point.
And that does certainly appear to be the case, the fact that we are seeing that luxury sector continue to outperform. But I think broadly, when we look at European assets altogether, we are seeing a bit of a pause in terms of that broader reflation trade. And I do think that suggests that a lot of this good news optimism on the European recovery is priced in. And I think investors are now going to focus to earnings season. If we look at just earnings estimates revisions for European equities, they're quite significant. Upgrades versus downgrades are the highest that they've been in over a decade. So clearly, I think earnings disappointments could potentially be that next catalyst to watch.
Okay, so it is something about the earnings story then that we need to keep in mind. We also have spent part of this program talking to the Banque de France and talking about expectations for monetary support in the Eurozone. And he was keen to point out that even when the PEP program comes to an end, it's not going to be a sudden stop. There'll be reinvestment and they can sort of morph into using a different pre-existing program instead. What did you make of his commentary today?
Well, certainly in the conversation that you had with him this morning, the one thing that struck me was just the challenge that central bankers are going to have in signaling when they're going to taper and how they're going to taper. We did have Fed's Bullard come out earlier this week, tying it to potentially that herd immunity. We are seeing the ECB just mixed messaging coming from them. So he is saying that March 2022 is when they anticipate that pandemic to end. They will have to ease PEP purchases to that longer running APP program. Whereas we have others on the council suggesting that, you know, we could see tapering in Q3. So clearly this is some mixed messaging that markets are going to have to really watch for going forward.
Yeah, and sticking with the central banking theme, but a different sort of angle on it. Hawkish Haldane drops the mic. That was the title of one of your pieces earlier this week, Laura. With regards to Andy Haldane, chief economist at the Bank of England, was seen as quite a hawk. He's going to be leaving the BOE. A little bit of movement in sterling perhaps around that announcement, but nothing substantial. Do we not read too much into the fact that this particular hawk leaves the building?
Well, and it was a knee-jerk reaction that we saw in the currency yesterday on the back of that news. And as an avid central bank watcher, it was quite disappointing. I do enjoy his quite colorful commentary. He has been the one coming out warning of, you know, this inflationary big cat is risk coming out of the bag. He's referenced Dr. Seuss in the past. But like you mentioned, he is really an outlier on the MPC. He has warned about those inflationary pressures. So I think from a market's perspective, markets are wondering, well, now that he's leaving at the end of June, could that kind of reel in those bullish undertones that we've seen from the Bank of England? That's unlikely to be the case. We are seeing this growing chorus of just a sanguine optimism when it comes to the outlook for the UK. So I don't think that's going to have a material impact on policy, but potentially, you know, something to watch for. Yeah.
One of the really big unknowns in various parts of the world, as economies unlock, seems to be the extent to which people will spend their savings pots, and that seems to be a big question that the Bank of England is going to be dealing with, just like many other central banks. Thank you very much, Laura, for joining us. Laura Cooper, Bloomberg Markets Live macro strategist, with us this morning. That is it for the European Market Open. Surveillance Early Edition is up next. European equity markets then kind of treading water, as Laura says, focusing in on the earnings season, perhaps looking through CPI and vaccine rollout. This is Bloomberg.
made sure we have 600 million doses of the mRNA, not of either Johnson & Johnson and or AstraZeneca.
The FDA is the gold standard for ensuring the safety and the effectiveness of the vaccines.
And that's why you see the word pause. In other words, you want to hold off for a bit, and very well may go back to that, maybe with some conditions or maybe not.
This is Bloomberg Surveillance, early edition.
Markets shrug off higher than expected U.S. inflation. Global equities gain after U.S. indexes hit fresh records. The Fed Chair Jay Powell joins David Rubenstein on Bloomberg TV today. Crypto's climb continues. Bitcoin rises over $64,000 for the first time ahead of Coinbase's $100 billion direct listing today. Nexo founder Anthony Trenchev joins the program. And Johnson & Johnson's vaccine rollout is halted in Europe. The continent's drug regulator is reviewing the shot after more links to rare blood clots in recipients. Good morning, and welcome to Bloomberg Surveillance Early Edition. I'm Yusuf Gameneddin in Dubai alongside Matt Miller in Berlin. Matt, you've got the Huarong situation in China that continues to dog the credit markets. It's keeping investors on edge. And then you've got this whole experiment around putting the two of us in on this program in the first hour to cover for Francine while she's on holiday.
Yeah, I think it's a pretty dangerous experiment, but we're going to slog through it over the next couple of days. Yusuf, I'm actually really grateful and glad to be on the air with you. I've been watching you in the mornings for years and years. I want to point out, I think it's a little bit ironic that on a day when we're going to kick off the big bank earnings, these staid old Wall Street firms, we're all really focused on a fintech, on the Coinbase IPO. Everyone I know is talking about, do you buy shares or not, and it's pushed the price of Bitcoin up past $64,000. So very interesting turn of events today in financial markets. Now, in terms of the increase that we saw in inflation yesterday, you mentioned at the top the biggest inflation numbers in CPI terms that we've seen in nearly 9 years. But investors are shrugging off that rising inflation and focusing in on the global vaccine campaign. You mentioned as well the Johnson & Johnson vaccine. It's been put on hold in the U.S. after 6 reported cases of severe blood clots in the brain. This, of course, follows all of the problems that we've seen from the AstraZeneca vaccine, which has a similar basis. Let's bring in Danny Berger right now. She's got the latest market action. Danny?
Matt, look, the markets, they were really expecting a strong March CPI. There were no surprises in those numbers. Base effects, that was the phrase yesterday. I was talking to Jim Paulson, of Luthold Group, who says, look, if we're going to see inflation, we're not going to get the hints of it until the end of this year. So what do you get? You get risk markets that are still able to hold a bid. We had the U.S. hitting another record overnight. We're looking at futures still up less than a basis point, just half of a basis point, but a tenth of a percent, but still up. We have Euro Stock 600 up, and we have yields that 2 basis points higher, but look, it's still below 1.7%. There's no concern here when it comes to rising inflation, and those are fears which have really been sapped out of the market as we can now focus on the growth picture. The one surprising thing yesterday, I will say, was this 30-year bond auction. Look what happens when we get this stellar demand, an immediate drop of 3 basis points, and that level more or less holding throughout the morning this morning. It is really surprising that people are happy to go jump in, not only by treasuries, but by duration as well. So what does it mean if that inflation playbook isn't there anymore? For one, we've seen value stocks start to stall out. So Yusuf, I really do think that we're operating with a different playbook going forward if inflation is not the #1 concern.
Absolutely, Danny. Thank you for the moment. That's Danny Berger there. We have a red headline crossing the Bloomberg from the IEA. They're boosting oil demand forecasts as the U.S. rebound helps clear the glut to the tune of about 230,000 barrels per day to 5.7 million barrels per day in terms of the 2021 demand growth forecast. Really ties in with a lot of upside we're seeing in crude oil right this minute, up about 1.3%, and tying back in as well with the optimistic notes from OPEC. Well, joining us now for more is Carolyn Simmons on some of these global themes. She's the UBS Global Wealth Management UK CIO. Caroline, thank you very much for coming on the program. You had a chance to reflect on these CPI numbers. And even though if you look at the real yields and where we are with other expectation benchmarks, it isn't a big surprise, the number in itself. But what can you take from that that would instruct you on what we could expect from the Fed later on this year or early next?
Yeah, I think it's telling us that we are getting into a period of more normal growth and inflation levels. So whilst obviously we're in a rebound from the base effects of the pandemic, previous to the pandemic, we also had a long period of secular stagnation with very low rates and very low inflation that central banks were struggling to get close to their target. So I think it's actually encouraging that inflation is picking up from these incredibly low levels. We do think, though, that this pickup is going to be temporary over the next sort of few months because of the base effects. But we also have heard from the central banks, particularly the Fed, that they will probably run things a little bit hot for a little while. So it could be that, inflation runs ahead of their sort of average inflation target for a couple quarters, but that doesn't mean that they need to take any action. So for us, it means we think yields will go a little bit higher. Our forecast on the US 10-year is 2%, but we don't expect the Fed or any other central bank to need to take action around inflation.
Caroline, I've noticed, so Yusuf just told us about the IEA boosting its oil demand forecast. More people want to buy gas. The BCOM index shows commodities have run, well, the BCOM index goes over the past 12 months from less than 60 to 85. And I just saw a piece on the MLI blog this morning that said China is trying to curtail aluminum production just as the world needs more of that to meet higher car demand. Some of these inflationary effects must be here to stay.
Yeah, I think on the commodities, it's mixed. So, for example, on oil, it's a supply-demand sort of rebalancing as we're coming out, from the effects of lockdown, and as people's mobility increases again, obviously the demand goes up. And so, I think that's temporary. And our forecast is $75 a barrel on Brent crude. On some of the commodities that are linked to sort of structural changes, production of batteries or electrification of networks, then perhaps, we could see inflation in those commodities for a longer period of time. But obviously, in terms of the inputs into broader-based CPI numbers, those more sort of niche commodities, are not so impactful in terms of, a CPI number.
Caroline, the risk-free yields are still going to remain below the rate of inflation for quite some time. With the scenarios that you've looked at with your team at UBS Global Wealth Management, would you say that it's still prudent to stick with some of the higher-yielding debt in the United States and some of the senior loans?
Yeah, so we've recently taken US high yield and senior loans up to most preferred. We do believe that they respond well in this type of backdrop where you've got growth. Interest rates moving higher doesn't seem to affect those two segments nearly as much as other segments of the fixed income market. Obviously, on the high yield side, it has exposure to the oil sector, but we think the default rates are behind us given where the oil price troughed last year and where we're forecasting it to go. So yeah, we're pretty positive on both of those segments within the fixed income space.
All right, Caroline, we're going to keep you with us. More to talk about with Caroline Simmons, UBS Global Wealth Management. Coming up, Bank of France Governor Villeroy tells us that the PEPP, the PEP, could come to an end by March 2022. At the same time, giving assurances that monetary policy is going to remain loose for a long time. The market's going to definitely want to debate that. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
The crisis phase could be over by March 22. So we could possibly exit PEP by March 22, PEP net asset purchases. It would not mean an abrupt tightening of our monetary policy. Reinvestment under PEP would go on. If I look at the future, obviously we should implement swiftly the so-called next generation funds, the 750 billion package. And I think that speed is still more important than weight to answer your question. It should come as quickly as possible. There will be also fiscal stimulus from national states. We should never forget them. The bulk of fiscal stimulus, it's still at national level.
Bank of France governor there, speaking exclusively to Bloomberg this morning, he said that even if PEP comes to an end in 2022, monetary policy would remain loose for years to come. But it's another thing that kind of caught my ear there. Caroline Simmons of UBS Global Wealth Management, does it make you chuckle a little bit when you hear European officials talk about speed in regards to financial moves? I mean, they haven't even started spending the recovery fund yet. If it's allowed to go forward, they only release 13% of it later this summer.
Yeah, I think it's a bit of a reminder, isn't it, at the speed differentials between the US and the Eurozone. Both, in terms of the vaccine rollouts, in terms of responding from a central bank perspective, and also in the GDP numbers, you see that coming through differently as well. I think there's going to be very interesting as we go through the course of this year. There's going to be more and more discussion around monetary policy generally and tapering. Who's going to taper when? How does it start? When do they start communicating it? When does the tapering end and the asset purchases end? And then, of course, as was just mentioned, what does that then mean for reinvestments? Does it actually mean a shrinking of central bank balance sheets, or does it just mean no longer a further expansion? And then we get on to also potential for rate rises. But there are a lot of steps, I think. We need to sort of make sure that we don't try and jump from the first to the last without thinking about all the other communications that we're going to get in between.
Well, and Caroline, of course, individual member states have safety net policies that we don't see in the U.S. And even to some extent the U.K. I talked to Klaus Regling from the ESM a couple of days ago. He told me in no uncertain terms that the EU doesn't need any more fiscal stimulus, but he said they've enabled bank lending at a faster pace and that they're spending the money on much more supportive measures in terms of long-term growth. Is the EU really positioned better or even as well as the US and the UK in terms of recovering from this pandemic?
I think in the short term, obviously, their growth is being dented still, by the slower rollout of the vaccines and the resurgences of the vaccines and lockdowns in Europe. So I'd say short term, not coping as well. Longer term, I'm afraid only time will tell. We're working under the assumption that the stimulus being provided is appropriate for the level of disruption that we've seen in economies, and that the output gaps are still there, and therefore it's not going to lead to a longer term inflation spike. But if in 5 years' time we work out that actually they did put too much stimulus in, then the Europeans, I guess, will be laughing if they put less in than the US. But our base case is that the assumption that central banks are, very sensitive to the state of the economic conditions around them and are trying to, add the policy as and when they see it without trying to go overboard.
Right, Caroline, if I could just jump in for a moment and reflect on what strikes me as an almost foregone conclusion that we're going to get more hiccups in the vaccination rollout. If that is the case, then this whole rotation into value, into cyclicals, where do I find a better degree of resilience in that trade?
Yeah, and I think the UK is probably quite a good place because the value stocks in the UK are linked more to the global conditions. So value in the UK is highly biased towards energy, materials, and financials. And obviously the energy and materials are to do with the global growth picture, so less linked to specific vaccine rollouts in specific jurisdictions, more linked to improving demand for oil and commodities generally as mobility increases over the course of the year. And then on financials in the UK, obviously some of it is UK financials, but a lot of it is international exposed as well. So I think that's probably a way to access value that is less linked to perhaps some of the areas of the sort of vaccine and the lockdowns, which have a lot of catch-up potential but are dependent on reopening.
Caroline, it's been great catching up. Thank you for stopping by. That's Caroline Simmons, UBS Global Wealth Management UK CIO. Well, let's get you the Bloomberg First Word news now as well. Some of the other important stories we're watching with Leanne Gerrans. Hey, Leanne.
Hey, Youssef. Sources say President Biden is set to withdraw all U.S. troops from Afghanistan by September the 11th. The target date marks the 20th anniversary of the terrorist attacks that led to the U.S. invasion and to the toppling of the country's Taliban leadership. Some forces will start leaving before the end of this month. Now, the white police officer who fatally shot a black man during a traffic stop in a Minneapolis suburb has resigned, as has the city's police chief. The mayor says he hopes the moves will help heal the community and lead to a reconciliation. It follows protests and unrest in the area. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Youssef.
Thank you very much for that. Well, let's get you a bit of a snapshot then of what else is coming up on the program. The U.S. and Europe are suspending the Johnson & Johnson vaccine. Joe Biden says that there are enough shots for all Americans, but what does it mean for the rest of the world? We discussed that as U.S. equity futures are barely above the flat line at the moment. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin. Now, after the U.S. paused the vaccine, Johnson & Johnson is suspending its single-dose treatment in Europe to review 6 cases of rare blood clots, similar to those reported for the AstraZeneca vaccine. But Joe Biden has reassured the American public this pause won't affect the U.S. rollout.
My message to American people on the vaccine is, I told you all, I made sure we have 600 million doses of the mRNA, not of either Johnson & Johnson and or AstraZeneca. So there's enough vaccine that is basically 100% unquestionable for every single solitary American.
Of course, at this point, epidemiologists and economists probably aren't terribly concerned about the U.S., but rather for poorer nations that desperately need vaccines. Sam Fazeli from Bloomberg Intelligence has an opinion piece out today. In it, he argues that even if the U.S. doesn't need the J&J vaccines, the rest of the world might be in real trouble. You can read the piece in full on OPIN Go with your Bloomberg terminal. On the internet, of course, Bloomberg.com/opinion. Sam joins us now to talk more about this. Sam, how much of a problem is this for the global rollout? I mean, the U.S. is doing fine already, and we all know they have far more vaccines than they need. But sub-Saharan Africa, Asia, Europe, we all need some.
Yeah, I mean, remember, Matt, this is a vaccine that's a single dose, just needs basic refrigeration. So, you know, it had everything going. It has everything going for it. Sorry, I don't want to talk in the past tense. So it's very unfortunate that this very rare side effect has been seen also with the J&J vaccine. And it clearly then comes down to everybody has to make every country has to make a risk-reward, risk-benefit calculation for itself. Because remember, COVID is not a nice disease to catch. And basically, if people are left alone to roam, what you'll get is everybody will eventually get the infection.
Sam, I mean, this is a very uncommon reaction that we're seeing with the blood clotting. Could you put that into context in terms of the seriousness of it, and also, I mean, what kind of red flags it might be raising about some of the other vaccines more broadly?
Yeah, so seriousness, it is very serious. It's a combination of two things that are very, very, very rarely, did I say enough very there? Rarely seen together. And that's what I think is kind of taking people a little by surprise. What the frequency is, I mean, the AstraZeneca one is coming out at between 1 in 100,000 to 1 in 250,000. I would say that it's closer to the 1 in 100,000 in the age group that the vaccine has been tested in used in the younger age group. So you do have that issue that you know, if you don't need to take this risk, you shouldn't take it. And of course, other vaccines, well, we know that the mRNA vaccines don't have this risk.
Sam, thank you for that. That's Sam Fazeli. He's the senior pharma analyst at Bloomberg Intelligence. Well, here's what's in the pipeline. Will Coinbase's listing be enough to prove that cryptocurrencies are here to stay? As Bitcoin is back at all-time highs, we speak to the co-founder and managing director of Nexo. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Markets shrug off higher than expected U.S. inflation numbers. Global equities gain as U.S. indexes hit fresh records. Fed Chair Jay Powell joins David Rubenstein on Bloomberg Television today, an interview you don't want to miss. Crypto's climb continues. Bitcoin rises over $64,000 apiece for the first time ahead of Coinbase's $100 billion direct listing today. Nexo founder Anthony Trenchev joins us in this program just around the corner here. And Johnson & Johnson's vaccine rollout halted in Europe. The continent's drug regulator is reviewing the shot after more links to rare blood clots left the vaccine halted in the U.S. as well. So continuing problems for this type of vaccine. Good morning. I'm Matt Miller in Berlin alongside Youssef Kamal Eldin in Dubai. Welcome to Bloomberg Surveillance Early Edition. It is Wednesday, the Ides of April, and we're seeing a lot of interest, Youssef, in crypto all of a sudden again. Because of this Coinbase IPO or direct listing, Bitcoin's price has absolutely soared.
It has. You know, Matt, I didn't get a chance at the top of the show to respond to what you were saying, and I have to say that I've been a big fan of you as well, so that's very important to highlight. That's the first thing I want to cover. And then the other bit is that we have a common denominator. We both love cars, and we love engines, and we love things that go fast, and I'd like to think that that's going to help this show go smoothly and sort of avoid a car crash. But then to your Bitcoin point, and that's, of course, what is primarily in focus, that's going to be something that is going to be tested very carefully because we're running up to a very important event. And usually when the event actually happens, you have a lot of profit taking that comes into play. So whether we see that or if something more sustained, I think is something we'll have to explore quite closely. Because if the record highs that we've hit by Bitcoin aren't enough to convince investors of the asset's maturity, then that is something that are arguably going to be all about the $100 billion valuation of America's largest crypto exchange. Ahead of Coinbase's much anticipated listing today, we take a look at how far crypto has come and what this moment means for the future.
Coinbase is going public, but it's not just another direct listing. It's a symbol of how far crypto has come and its increasing institutional acceptance. Think about it. Bitcoin has been around since 2009, and despite sustained rallies, the mainstream basically always viewed it with extreme skepticism.
This was the biggest Ponzi scheme in human history, and it's going bust.
Bitcoin, which in our view is nothing else but a Ponzi scheme.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day.
I think it's a scam for criminals around the world.
It's an index of money laundering.
Fast forward to now, Bitcoin has more than doubled just this year, and it's up more than tenfold since its lows last March. And now with the total cryptocurrency market worth over $2 trillion, the large institutions are ready to play a role.
Bitcoin should be worth about $400,000.
Coinbase is the largest U.S. cryptocurrency exchange, and investor interest is massive. In fact, it's so big that despite being less than a decade old, the company is, by some measures, larger than established exchanges like ICE or NASDAQ.
I think that there are many that are sort of standing outside the gates, just waiting for that moment when they can have exposure to Bitcoin.
Coinbase generated revenue of $1.8 billion in the first 3 months of the year and had 56 million verified users in the quarter. The numbers don't lie. Crypto seems here to stay.
Joining us to talk about all this is Anthony Trenchev, co-founder and managing director of London-based crypto lender Nexo. He correctly called, I guess it's got to be over a year ago, Anthony. Just at the beginning of 2020, you said it would hit 50,000 by the end of the year. Now we're trading at 64,000. How high do you think Bitcoin could go? Can you give us another forecast for, say, 2021 or 2022?
Well, now that we have pierced through 60,000, I think we have cleared the way to 75,000. My prediction would be in the next 12 to 18 months, we're going to hit $100,000 per Bitcoin, not as quickly as what we saw in terms of rallies last year, because, you know, everybody is now in on the trade, and, you know, usually that's not such a smooth ride. But now that we've pierced through 60K, the air has been cleared.
Anthony,
I wonder what you think about the $100 billion. Sorry, Youssef, I think we're probably going to ask a similar question. The $100 billion valuation of Coinbase must make you consider raising more money for your business. I mean, you've been so successful with Nexo. You started a lot of services early, far before other providers did. What kind of interest are you getting?
Well, a lot of traction recently, specifically from the United States, which interestingly coincided with the distribution of the latest round of free money. But at Nexo, we have been very proud to have a self-sustainable business, meaning that our Earn product, which gives you the means to earn interest on your idle assets, and the crypto-backed loans have matched each other out so that we can grow without outside funding. And this will be postponed for a later stage, hopefully at better value. Hopefully, why not even, you know, something close to what Coinbase is getting.
Anthony, I wonder, with President Biden now in office and fleshing out a lot of the key policy priorities, what the administration's stance is going to be towards Bitcoin. What is your read and what have you been hearing?
Well, I tend to focus on the longer stream of events, and we got a very positive sign from the Department of Treasury when they allowed last year U.S. banks to hold Bitcoin in custody. You know, PayPal coming in, a lot of the other guys, which show us these are not rebel companies. These are companies that compliantly operate wherever they are. Now, with the Biden administration, I think crypto is here to stay. There's no question about that. Obviously, you know, anti-money laundering policies have to be in place, akin to what we see in the banking sector. And we have to see about the energy consumption, which is not a standalone problem for Bitcoin, that it consumes a lot of energy, but it's a question of how energy gets produced for any sector, really. And I think these are going to be the challenges, but whatever happens is going to be just a bump on the road. Longer-term perspective, crypto is here to stay, and we're still early days.
I mean, the ECB and the PBOC, they're working on their own digital currencies. What extent is that a threat for the remainder of crypto, that sort of mainstream comes up with their own form of crypto?
Well, there will be like, you have the US dollar and you have gold, you know, they're very different type of assets. That's the same thing with centrally controlled and issued currencies, which are just bringing fiat currencies to the 21st century in terms of technology. But then fundamentally, there's going to be an ever increasing place for scarce assets such as Bitcoin, which, you know, we've been talking about. This is gold 2.0. So very different niches, and they can exist simultaneously rather than compete with one another.
You know, it always gets me when someone complains that Bitcoin is used for money laundering or the drug business, and then I think about the amount of money laundering that's done or drugs that are purchased with the US dollar. It's just a silly comparison. Lately, I've been thinking the same thing about the carbon footprint issue. A lot of concerns, understandably, about the carbon footprint of mining Bitcoin. On the other hand, the US dollar has a pretty darn big carbon footprint as well. How do you think about the ESG issues surrounding Bitcoin?
I think about the in terms of how do we produce energy, and that obviously with the growth rate of population, of economies, the constant consumption, we have to find a holistic answer to it, and China has to be in on it as well, because without them and the US, you know, whatever we do is just another drop in the sea. I don't see, you know, with every bull cycle of Bitcoin, there's certain narratives they're trying to spread FUD, you know, fear, uncertainty, and doubt into the minds of investors. This latest round is going to be the Green Deal. Obviously very important, but so it is for the automobile industry, so it is for air travel. It is not Bitcoin specific. It has to be addressed as a general issue affecting every aspect of human life.
I mean, with the amount of momentum, not just behind Bitcoin, but behind the crypto space at this minute, your business must be doing quite well. Can you qualify and quantify that for our global audience? Where are we at?
Sure. Well, Nexo is a financial institution which provides banking services to the blockchain space. Right now, we have an excess of $15 billion of assets under management. You know, the two lines are predominantly the crypto-backed loans, which allows you to tap in to your crypto wealth without selling it. And then we offer the ability to earn up to 12% per year, which in this low yield environment and compared to what your JP Morgan account or Bank of America is yielding, is quite enticing. We are also tapping into the exchange space as of recently with our internal exchange. So, you know, we see double-digit growth of users. We have more than 1 million active users, and it's been a stellar rise.
Anthony, I think a lot of your customers as well feel like real stakeholders in the business, and that's why I'm wondering, you know, how close you are to going public, to giving them an actual share in the company. You know, I love that Coinbase is doing a direct listing rather than an IPO, so you don't have to be a bigwig and get syndicate. You can actually buy in with everybody else. Don't you think Nexo customers want the same chance to own a piece of the business that you started?
Well, we already have made steps in that direction, in the sense that we have our native Nexo token, which entitles you to a portion of Nexo's profits, 30% of it. We are now launching a governance element to it, and a governance token where the holders of the native asset, which is even easier to do than a direct listing or an IPO, they already have a say in the way that Nexo is being run. So we are ahead of the curve here. With regards to more traditional, you know, approach to public accessibility, we are obviously evaluating all options. Let's see how Coinbase goes and what happens the day after, you know, whether we're going to see some pullback and how they perform. But, you know, at the end of the day, you can't expect to be drinking champagne in the evening if you're afraid of the hangover in the morning.
Yeah, absolutely. Perfume going in, garbage coming out. That's what my dad always told me. Anthony, thanks so much for joining us. Anthony Trenchev there, Nexo co-founder and managing director. Really fascinating company there, Youssef, and one of the first to offer credit, really, for crypto holders to offer big whales, for example, a way to get exposure, Youssef, without having to necessarily liquidate positions.
Yeah, I am a bit skeptical though about the amount of upside we've seen in the last few days in Bitcoin. So that's going to be one we're going to watch carefully as we count down to that big listing.
The last 10 years,
meantime,
right?
here's what's
people are always skeptical when it hit 1,000. I remember, you know, Joe Weisenthal was like, "You're crazy, man." And you know, then we hit 17,000, 20,000 in 2017.
I'm not saying that I'm not saying I'm skeptical on the whole thing. I'm just saying that skeptical in the next few days, and then it will potentially resume and pick up where it left off. And then it's also way too early for me to be drinking champagne, although he did say that comes in the evening. Anyway, I'm you know, all over the place here. Let's get you a bit of a preview of what's coming up. A record tumble in the dollar bonds of China's Huarong asset management company is stoking fears of a contagion. We're going to bring you the latest on the sell-off rolling the world's second largest credit market. That's next. This is Bloomberg.
we're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin alongside Youssef Gamal Al-Din in Dubai. Let's get your Bloomberg business flash right now. For that, we go to Leanne Gerrans in London. Leanne?
Hi, Matt. LVMH shares are surging as luxury looks to be defying the pandemic gloom. First quarter sales soared, surpassing the level seen in 2019. Revenue at the fashion and leather goods unit jumped over 50% from a year earlier. That division is a key driver for the company, benefiting from the growth of brands like Christian Dior and Louis Vuitton. Now, a reshuffle at the top of Toshiba is casting doubt on a potential buyout plan. The Japanese company's chief executive is stepping down and being replaced by the firm's chair. It comes amid resistance to over $20 billion buyout offer from CVC Capital Partners. Sources tell Bloomberg KKR is also now exploring a bid. And sources say Credit Suisse has unloaded about $2 billion of stocks tied up to the blow-up of Archegos Capital Management. It follows a frenzy of similar transactions that raised almost $200 billion in market value. According to analysts at JP Morgan, the downfall of the firm will result in $10 billion of losses for black banks. And that's your Bloomberg Business Flash. Youssef.
Thank you very much. Let's get to another key story, the latest on the sell-off roiling the world's second-largest credit market. Mounting concern about the financial health of China Huarong Asset Management is fueling a record tumble in the company's dollar bonds. Huarong is a distressed debt manager controlled by the country's finance ministry. For more on this, we're now joined by our China credit reporter, Rebecca Chung Wilkins. Rebecca, I look at the scale of this, $42 billion worth of offshore and local bonds that are outstanding. Investors who are exposed have every reason to panic.
Yeah, this really is an extraordinary story of mounting stress at what is one of China's more important central state-owned companies. So Huarong first stoked investor concern after it delayed its results of its financials that were due March 31st. And that sort of triggered questions about the viability and visibility of the group. As time has gone on, there have been reports of restructuring, potential restructuring, as well as a kind of deafening silence about whether or not the state is going to step in to support the firm or to prevent investors taking a potential haircut. And that has prompted these very key questions about the extent and scope of support from the government. And as you say, it's worth bearing in mind that this is an A-rated investment-grade borrower. It's considered sort of quasi-sovereign by some, and its bonds are now trading at junk levels. So some of the bonds are as low as around 62 cents on the dollar. So this is really a very dramatic reversal for bonds and for a borrower, which was sort of historically held by many institutional international investors.
What are the signs, Rebecca, of a broader contagion in the market? I noticed, for example, with Huarong, this is dollar debt, and left me wondering if this is only a dollar bonds issue or if it goes across currencies.
Yeah, I think that's really interesting. We've certainly seen that Huarong's dollar debt is taking much more of a hit compared to its onshore debt. There is more sort of investor scrutiny about some of the provisions of the offshore debt, which is also linked and issued and guaranteed by a unit separate to China Huarong. And kind of the broader onshore market has actually remained relatively stable. Government yields and corporate yields both dropped yesterday. exactly. So we really are seeing this pain sort of contained to Asia's dollar bond market thus far.
Rebecca, thanks so much for joining us, our China credit reporter, on this developing story, really picking up a ton of interest. Rebecca Chung-Wilkins, thanks very much for your time this morning. Coming up, we've got, speaking of a ton of interest, U.S. earnings season kicking off. J.P. Morgan, Goldman Sachs, Wells Fargo, all report before the bell today, so imminently we'll bring you the details next. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Yusuf Ghamideen in Dubai alongside Matt Miller in Berlin. Let's get to the results season that kick off today with the banks. You've got JPM, Goldman, and Wells Fargo. They're going to be reporting before the bell. And that's going to be followed by Bank of America and Citigroup. That comes on Thursday. Danny Berger joins us now for a bit of a preview. Danny, looks like we're set for another strong quarter for these profits.
Yeah, a really banner quarter this is likely to be. And really, if I may steal, Matt, from one of your excellent interviews yesterday with Mike Mayo of Wells Fargo, he pointed out, I thought he put it really nicely, it's the 5 C's that are going to drive this earnings. So it's cost control, it's the yield curve, it's better credit quality, it's also capital returns and capital markets. That 5th one, capital markets, that's the big one for the past 3 months. We had this absolutely gigantic boom in SPACs, not to mention a very healthy IPO market. So we're expecting stock underwriting to triple this quarter to an all-time record. So that means the big deal makers, your Goldman Sachs, those are the ones that are really set to shine.
By the way, I asked him, first of all, Mike Mayo is a legend, Danny. I asked him during the break, I said, Does it concern you that the SEC is looking into these SPACs because it's been such a huge piece of the pipeline for deal making? And he was like, we could talk about that if you want to get distracted, but it's not really my main focus. So he kind of poo-pooed my idea that the SPAC slowdown would hurt bank earnings.
Yeah, and look, at least for this quarter, obviously it's not going to have any impact. Of course, how long the SEC kind of puts the SPAC pipeline on ice while they're looking at these different issues, perhaps that could affect banks going forward. Mike Mayo knows way better than I do, so, I would tend to say if he thinks that it's not going to affect anything. But look, that question has to be asked, and I am sure that an analyst is going to ask it because it was such a big contributor to earnings. If there's anything that could dent that, that means a healthy part of their profit for the first quarter won't continue going forward.
Here's the thing that worries me somewhat, that we've heard from Credit Suisse and a few other banks around their exposure to Archegos-related losses. But now with some of these other banks reporting, we might actually get a little bit more detail on some of the exposure that's not accounted for yet in the public markets.
Right. Well, U.S. banks, Yusuf, most of them said that they didn't have any substantial losses from this, so likely won't show up in the earnings themselves. But perhaps it's much like the SPAC question, where we could see it show up is an analyst asking if there are any planned changes to hedge funds like Nomura and Credit Suisse has done, lowering leverage exposure.
Danny, thank you very much for that. Danny Berger there.
Didn't mean
Sorry,
to
Matt, I got too enthusiastic there. Don't miss Jay Powell speaking with David Rubenstein. And Matt, it's been a real pleasure.
It has been a real pleasure. Great joining you. I'll see you right back here tomorrow, Yusuf. This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But it's very close to that. This is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. I'm not talking energy only, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain Neom on the back of a set of PowerPoints and a video clip. You just need to be here. You need to breathe it. And specifically the startup mode and things happening. Buses all around you here.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I made sure we have 600 million doses of the mRNA, not of either Johnson & Johnson and or AstraZeneca.
The FDA is the gold standard for ensuring the safety and the effectiveness of the vaccines.
And that's why you see the word pause. In other words, you want to hold off for a bit, and very well may go back to that, maybe with some conditions or maybe not.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from New York and Berlin on this Wednesday, April 14th. Our top stories today. Banking bonanza, profits are expected to soar as Wall Street kicks off earnings season. We'll hear today from JP Morgan, Goldman Sachs, and Wells Fargo. Time out for Johnson & Johnson. That vaccine pause will give health officials the chance to educate doctors on exceedingly rare side effects. And Coinbase in the spotlight, the largest U.S. cryptocurrency exchange goes public using an alternative that's only been tried a handful of times. I'm Kaylee Lines in New York, Matt Miller in Berlin, Francine Lacqua is off today. Matt, so much that we're watching today, but Coinbase's trading debut, I think, really takes the cake for both of us.
Yeah, and I think it's ironic that it takes the spotlight on a day when we're getting Goldman Sachs, Wells Fargo, JP Morgan earnings out. You'd expect the big banks to be really the main focus, but we're all watching Coinbase, we're all watching Bitcoin, we're all watching Ether, so I think it's pretty fascinating that these little fintech startups have kind of stolen the spotlight from big finance.
And we're 3 minutes into the program and we haven't said the word inflation yet. Those fears getting totally put to the side as they were yesterday with those record highs here in the U.S. As for what went on in Asian markets overnight, the big underperformer was actually Japanese equities, the Nikkei down by about 0.4%. But you did see Chinese stocks up by about 0.8, and the big outperformance came from Hong Kong. The Hang Seng up about 1.4%, really led higher by big tech. The biggest points contributor was Tencent. It was up about 2.5%. Even as Bloomberg is reporting, it is not marketing a dollar bond deal as we continue to see Asian credit markets roiled by the roiling of Huarong Asset Management. When you look at Asian investment grade dollar bond spreads, they expanded for the 8th day in a row, up 6 basis points, now sitting at the widest in about 2 months. As for what the picture looks like in Europe, mostly green across the screen. We have the Stock 600 higher by about 0.2%, the FTSE 100 in the UK by about that much as well. And interestingly, the British pound stronger against the dollar for the 3rd day in a row, its longest winning streak in about a month. Right now, the cable rate is sitting at about 137.96 at this point. Not a lot of movement in the European bond market. But again, when it comes to FX, I would note the dollar is broadly weaker in the G10 space today. And as for other U.S. assets, after that record high for the S&P 500 yesterday, it does look like we could see another record come the opening bell. E-mini futures up 5.5 points in the bond market after that inflation data and a successful 30-year auction yesterday. We saw yields come down 5 basis points. We are crawling back up a touch today, up 2 basis points on the 10-year yield, sitting at 1.63% at this point. Interesting, oil higher for a 3rd day as well. The IEA upping its demand outlook. That has WTI crude up 1.6%. We're above $61 a barrel once again. And then coming back around to Coinbase, Matt, Bitcoin taking part in that optimism, continuing its winning streak. Fresh record high above $64,000. I think it might be time to remember your password, Matt.
Yeah. It's terribly unlikely. I think it was a password that was generated for me by my blockchain wallet. Nonetheless, you know, what's lost is lost. Let's take a look ahead at what's going on today. Earnings season kicks off in the U.S. with results, as we've been talking about, from J.P. Morgan, Goldman Sachs, and Wells Fargo. Coinbase goes public via a direct listing on the NASDAQ. This will be fascinating to see how it works and if it's as democratic as they hope. I think the CEO said they want to spread freedom around the world. ECB President Christine Lagarde speaks at 11 a.m. New York time. Will be interesting after we heard Villeroy say the PEP program could end next year. Fed Chair Jay Powell speaking with David Rubenstein at noon New York time. He said they're not even talking about tapering. So kind of going the other direction again at the ECB. We're also expecting comments from President Biden about his plan. We saw these headlines cross the terminal late yesterday to pull all of the troops out of Afghanistan by September 11th. And that will be fascinating to watch, Kaylee, if he's able to do that, especially without a flare-up. We've seen since Biden came into office these big geopolitical flare-ups on the eastern border of Ukraine, as well as between China and Taiwan. Yesterday I was talking with Admiral Stavridis, and he said whenever a new administration comes into office, the bad players on the world stage will try and push and test and see what they can do. So it'll be fascinating to see if he's actually successful in pulling those troops out of Afghanistan.
Yeah, and the Admiral had a great opinion piece out on the Bloomberg terminal yesterday talking about that Ukraine issue and how it ties into China and Taiwan as well. And it's an interesting question, Matt, how much the market really is appreciating those geopolitical risks with all of the focus being on inflation and then, of course, earnings. And let's focus more in on bank earnings as well. J.P. Morgan, Wells Fargo, and Goldman Sachs will kick things off this morning before Citi and Bank of America tomorrow. With us for more on what to expect is Bloomberg's Danny Berger. Danny.
Kaylee, I know I promised you wall-to-wall coverage of Archegos over the next few weeks, but it's unlikely to really be a highlight in the bank earnings. We might get some commentary, perhaps some analyst questions, but what will be the headline most likely is the record deal-making for these banks. We're expecting stock underwriting to triple to a record thanks to that red-hot SPAC market. So definitely look for those like Goldman Sachs to really be the ones to shine this quarter with that big deal-making. Now, the question, though, for these earnings is going to be how much is already priced in with pretty strong gains already so far this year. We know they're going to have big loan loss reserves to be released, so that's certainly going to help their profit. The yield curve has already pushed these stocks higher, so expectations at the moment, Matt, are very high.
All right. Danny, thanks very much for that. I want to get to some breaking news that we're just seeing across the terminal. The European Union plans to raise as much as 800 billion euros in debt between now and the end of 2026. So the EU going to be raising 800 billion in debt in order to fund the recovery fund, the 750 billion euro recovery fund. Really fascinating right now. And why not? You know, bunds are trading at negative 30 basis points. They're basically getting paid to borrow money from investors. I want to talk about, though, the debt picture in the world's second largest credit market in China and focus in not on state debt directly, but on state-owned enterprises debt. There's been real concern about the situation at Huarong Asset Management in China. It's fueling a record tumble in the company's dollar debt. And really, we're seeing a lot more state-owned enterprises debt defaults than private company debt defaults in China, which I thought was fascinating. Bloomberg's China credit reporter Rebecca Chung-Wilkins joins us with this now. So, Rebecca, are investors panicking about state-owned enterprises debt now?
Well, we're certainly seeing investors panic about China Huarong. And this is a really extraordinary story of mounting stress at one of China's kind of most important central state-owned companies. And while defaults have become more common among some of the local SOEs or state-linked firms, you know, we haven't really seen this happen at a firm that holds the kind of prominence that China Huarong has. This is one of China's 4 state-run asset managers managers of bad debt in the country. It's really considered a cornerstone of China's financial landscape. China Huarong first stoked investor concerns when it delayed the release of its financials, and since then there have been reports of potential restructuring, and most importantly, this kind of deafening silence about whether or not the state is going to step in to support the firm. And, that's what has really pushed the dollar bonds down. It's worth bearing in mind that this is an A-rated investment-grade borrower. It's considered quasi-sovereign by some. The bonds are now trading at sort of clear junk levels, so somewhere in the 60 cents, 62 cents. So it is a really dramatic reversal for bonds, which were historically held by many institutional international investors.
Yeah, fascinating story. Bloomberg China credit reporter Rebecca Chung-Wilkins, thank you so much. And to a much-anticipated listing today, Coinbase will start trading on the NASDAQ via a direct listing later this morning, with investors eyeing a $100 billion valuation. Joining us now is Joe Weisenthal, co-anchor of What'd You Miss? And Joe, we have seen some pretty incredible first-day price action for IPOs and direct listings over the last year or so, and then I feel like you add crypto onto that and things could get very wild. What are you expecting today?
Yeah, I think it's going to be a pretty wild day. You're exactly right. We've seen big pops in direct listings. We've seen big pops over the last year in IPOs in general. Then you add all the hype around crypto, and then what's particularly distinct about crypto is the lack of easy ways for institutions historically to have gotten access to this asset class. All kinds of things going into one. Of course, this morning we see the big coins, Bitcoin, Ethereum, and so forth at record highs. All kinds of things coming together at once should make a pretty extraordinary day of trading.
So how is this going to work mechanically, Joe? I mean, we know how IPOs work, and it sometimes takes a half hour, an hour. In the case of NASDAQ, it can take even longer. How do we expect the direct listing to play out in time terms?
Yeah, I'm not sure. It could take a while. There really haven't been a lot of NASDAQ direct listings. I mean, this is a fairly nascent thing that the big exchanges are doing. This is sort of a fairly new route, but I think, it's probably going to look similar to a lot of these IPOs where it could take quite a while for there to be some sort of a balance. But in the end, I mean, it all works the same, and sort of like finding some price at which the number of sellers, the number of buyers want to meet. So we'll see. I mean, there's no fundraise involved. Coinbase certainly doesn't need any money. But yeah, I mean, I would expect it'll be a while before we get an initial trade this morning or this afternoon, perhaps even.
The anticipation is truly killing me. Joe Weisenthal, co-anchor of What'd You Miss? Thank you so much. I cannot wait to watch this price action today. And I also want to take a look at some stocks moving in pre-market trading. Another story that's getting a lot of attention on the Bloomberg is the fact that the Archegos unwinding is not over. Credit Suisse, according to Bloomberg's reporting, unloaded about $2 billion worth of stocks tied to that Archegos blow up. Those offerings, including Discovery and iQIYI, both of those stocks down at least 3.5% in pre-market trading, about 4% in the case of iQIYI, and Credit Suisse's ADRs in U.S. pre-market trading down by about 0.6% before the bell. Matt?
iQIYI, huh?
I looked it up.
That's how you pronounce. Easy for you to say. All right, cool. We will talk to Julian Chillingworth next. We're not going to lose focus on those inflation numbers that Kaylee mentioned. They came out yesterday afternoon in the U.S. We did see a little bit of market moves, and I'm going to show you some historical moves when inflation expectations were this high. Then later today, the NASDAQ hosting its first major direct listing with Coinbase. You may have heard us talking about it already. We'll speak with President Nelson. That is the NASDAQ president, Nelson Griggs, at 3 p.m. in New York, 8 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Kaylee Lines in New York. Francine Lacqua is off today. Now, I promised you an historic look at rates around inflationary periods. And I'm not going to go that far back, but I will say to our radio listeners on London DAB Digital, I've got a chart here that's fairly interesting. Don't worry that you can't see it. I can walk you through it. Between 2009 and now, there have only been a couple of periods when we've seen inflation actually topping 2.5%, right around September 2009, only for a few short months, and then in 2011 for most of the year and some of 2012. What we saw actually was rates, especially in the bigger period, 2011, 2012, coming down, and that's why I think it's interesting that we're so worried about rates right now going up. In fact, yesterday, after we got better than expected numbers, we actually saw the 10-year yield come down. Joining us to talk about this a little bit is Julian Chillingsworth, Chief Investment Officer at Rathbones. Julian, what did you think about the numbers that we saw yesterday and the market reaction in rates?
Good morning to you, Matt. Well, I think that the number was slightly higher than consensus at 2.6, but not as high as some of the whisper numbers I'd heard at 2.8, 2.9 even before. So I think the market was pretty sanguine after the announcement. And it's all about, isn't it, whether that the market will buy into the Fed's mantra of looking through the spike and in inflation, and whether then inflation actually begins to ease back as we get to the turn of the year. And as the US economy opens up further and employment picks up as well. So I think there's going to be quite a lot of toing and throwing, particularly amongst bond investors, as we run up to the year end, as to whether rates may move earlier than the 2024 that Jerome Powell keeps talking about as likely move for rates upwards.
Well, Julian, do you think it's a case of enough growth and inflation already being priced in by the market? And if so, what does that mean for the oxygen left in the reflation trade?
Yeah, I mean, I think it's very interesting. In the last few weeks, I have seen economists generally pushing up their US growth forecast for this year by quite large numbers, by 1% in GDP terms, which is pretty big, even though there's a margin for error. So, you know, I've seen 7 and some people even going for 8, 9% GDP growth this year now. And yes, you're right. I think that a lot of that's now reflected in the market. We've had a great run out of the S&P 500 near on 10%, and there might be a pause. But in terms of the reflation trade, I think there's still probably some good news to come. And this reporting season will be key as to how, particularly in the hospitality sector, companies talk about the rest of the year and how optimistic or not they are about the opening up of the US economy. So I think we need to note those statements very closely. And certainly,
Julian, at what point do investors start to take some profits here? And, you know, as you reduce risk assets, where do you put that money?
Well, I think that's part of the problem, isn't it? It's where indeed do you park your cash, because you're not going to get a great return if you leave it in cash. And in the bond markets equally, I suspect it's not going to be magnificent, is it? So I think people will run their reflation trades, and they will run their exposure to equity markets globally for longer than you might expect. I suspect individually there will be more sector rotation. We've seen in the last few weeks people return to the tech sector to a degree, and that happened last night in the States. And I think in some of the more stretched valuations on hospitality, retail, etc., we could see some profit taking there, particularly post the numbers. So I think more sector rotation than actual exit from the equity market in the short term.
Julian, what kind of catalyst do you think earnings season is going to be? Obviously, that kicks off in earnest this morning with the big banks. Is just meeting expectations going to be enough given how high the bar is?
No, I think it's going to be, to a degree, it's going to be about obviously exceeding expectations, but it's what you promise, isn't it? I mean, analysts on the sell side particularly will have been led pretty hard by the CEOs and the FDs coming into this season, and they will aim to beat those numbers. But what it's really about is the outlook statements and how they are coping with a economy that's running hot. Are supply lines under pressure? Is that going to see margin pressure? Are they seeing wage increases coming through? Particularly, we've seen that in some areas in the restaurant industry and hospitality and retail in the States. So those are all the things that investors are going to be looking out for when we run through these Q1 numbers.
Yeah, those pricing pressures, definitely a really fascinating point. I wish we had more time to talk about it, but we are out of time, unfortunately. Thank you so much, Julian Schillingworth, Chief Investment Officer at Rathbone. And coming up later today, Fed Chair Jerome Powell speaking at the Economic Club of Washington with David Rubenstein. Bloomberg has live coverage of the event at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Kaylee Lines in New York. Francine Lacqua is off today. Let's get you your first word news from the Bloomberg terminal. Bloomberg has learned that by the 20th anniversary of 9/11, the Biden administration plans to withdraw U.S. troops from Afghanistan. The terrorist attacks led to the American invasion that ousted the country's Taliban leadership. The new deadline means the U.S. will leave a few thousand troops in Afghanistan past May 1st. That was the target set by the Trump administration last year. China says the U.S. is raising tensions by sending a group of former officials to Taiwan. A White House delegation is traveling to Taipei for the 42nd anniversary of the Taiwan Relations Act. That's the U.S. law governing Washington's unofficial relationship with the island. Beijing says the trip will not change the fact that, quote, Taiwan is part of China. And now it's members of President Biden's own party who are threatening to stall his agenda. 17 New York Democrats in Congress say that any economy recovery bills funded by tax increases will need to fully restore the state and local tax deduction. The SALT deduction was removed during the Trump administration. It's valuable for residents in high-tax states such as New York and California. Kaylee?
And Matt, of course, you have the likes of Governor Cuomo here in New York saying, don't worry about state tax increases. It'll be offset when SALT's repealed. We'll have more on bank earnings next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Matt Miller in Berlin. Francine Lacqua is off today. And Matt, we're T-minus an hour and 15 minutes until JP Morgan earnings, and then T-minus an indefinite amount of time until Coinbase starts trading.
Yeah, exactly. And I mean, the question is, which one are you more looking forward to? I'm excited to see JP Morgan's earnings come out, especially after the tome that Jamie Dimon dropped on us last week. But really excited for the Coinbase IPO to see how it goes. I think it's going to be huge for retail. I know a lot of my friends from high school who are new investors, let's say, are all talking about it. So it's not just a Wall Street thing. Also, people in Ohio will be involved.
Well, and the fact that it's a direct listing, of course, plays into that whole democratization of finance narrative. I want to get a quick check on the markets ahead of both of these events, or really all of the events that we have going on today. We are looking at gains on both sides of the Atlantic. We're up by about 0.2% on the stock 600 in Europe, and futures after a record high in the U.S. yesterday put us on track for another all-time high at the open, with S&P E-minis up about 4 or 5 points at this point. Interesting, of course, we had that inflation data yesterday. Yes, it surprised to the upside. No, the markets didn't really care. A lot of that maybe already baked in. Plus, you had that really successful 30-year bond auction. That brought yields down, but we are creeping back up this morning, up 2 basis points on the 10-year yield, sitting just around 1.64%. And then, of course, in anticipation of Coinbase's trading debut, Bitcoin continuing its rally. Not a huge move today. We are just off of the $64,000 we reached earlier, but still, though, would be a record closing high at this level. And of course, with those moves in Bitcoin eating some crypto-tied stocks in pre-market trading, your usual suspects, Riot Blockchain, Marathon Digital up about 2% and 3% respectively. And interesting, we're seeing some dip buying coming into a few stocks as well. Immunity Bio was down for 11 days in a row, its longest losing streak in 5.5 years, but it was up 4% yesterday, another 7.6% in early hours this morning. And then GameStop, coming off of its longest losing streak since 2017, looks set to snap that today. It's up about 3% before the bell, Matt.
All right, fascinating stuff there. Always interesting to watch GameStop, especially on a day like this when so much retail involvement is expected in markets. As we've mentioned, JP Morgan, Wells Fargo, and Goldman Sachs are going to kick off earnings season later this morning, followed by Citi, Bank America, tomorrow, Morgan Stanley, then on Friday. And the success of these banks has led to this rally in the S&P. I'm looking at a chart right now that shows the march higher all the way up past 4140. And it's just fascinating to think that, right before the pandemic, we had come down to a low of less than 2,500. So the S&P 500, will it retest its 2019 lows? It seems terribly unlikely at this point. Joining us now to talk about what to expect from these bank earnings is Shonali Basak, Bloomberg Wall Street reporter. Shonali, I guess JP Morgan we're a little bit more prepared for JP Morgan because we got such optimism out of Jamie Dimon in his letter.
That and nothing muddy tied to Archegos, right? What's not so clear about JP Morgan is what are they going to say about reserve releases. We want to see them release more given that the economy seems to be in a better place, but it's kind of unclear, right? Jamie Dimon did say the prior quarter not to expect those reserve releases to be recurring earnings. That's the complication, that consumer bank and the pace of loan growth. Over at Goldman Sachs, which you have the same day, it's really interesting, Matt, to pair the two and really watch them compete in investment banking. You're seeing JP Morgan, of course, expectations for them to come in above $5 billion in fixed income trading revenue. Goldman should have the biggest increase in equities trading revenue with that 10% increase to more than $2.4 billion. Right, the stakes are high. Both of those stocks have increased more than 20% this year. And the real question is, where does it go into the next quarter? Because as we know, this is a backward-looking print.
Shonali, the SPAC boom has been huge for a lot of these banks. But yesterday when I was talking to Mike Mayo, he said he doesn't think it's material for future growth. Their markets business and their deals business he sees as still two really strong pipelines despite the SEC issues in the last few days.
Yeah, listen, on its best day, Goldman Sachs is expected to bring in about $1 billion or so in equity underwriting revenue. That is less than half of what it makes from equities trading. Of course, the businesses feed off of each other, but that just kind of goes to show you how big that business is relative to its trading desk. On M&A, we had 3 months, right, of the best start to the year that we've had in in about more than 2 decades, really. And there's an expectation among deal makers that the bigger deals, the ones over $20 billion, will come back. And as we know, at least 3 years in a row, Goldman Sachs is #1 in that business, and it takes some time for those fees to materialize. So you have equity underwriting that's good this quarter, but even if it doesn't keep up, as long as they could show that those other businesses could keep up, you're in pretty good shape.
But Sonali, to that point, on the trading side, I'm looking at a VIX right now at a 16 handle. It seems that those peaks of volatility are finally maybe over. Is the trading boom going to be over for Wall Street?
It's hard to know, right? Because if you look at the options market, there's still some concerns. There's still some expectation that volatility will come back. Way too early to know. But on top of that, to your point, Kaylee, what will Goldman and JP Morgan in particular, and on Friday Morgan Stanley, which is the biggest prime brokerage on Wall Street, what will they say about the leverage their clients are taking on, as well as the risks they're willing to take after some major blowups this year?
Well, yeah, I feel like risk management, if it's not a topic for first quarter earnings, definitely going to be some questions on the call. Are we going to get any more clues as to how far the fallout from Archegos really extends today?
Yeah, I think so. I think that analysts will certainly ask about it if they don't address it up front in the earnings numbers. Because, you know, there's 2 things that could happen here. Either these banks rein back quite a bit, or you'll hear from JP Morgan and Goldman today that it's a chance for them to take share as some of the other banks start to tighten terms. It could go either way, but it would have big ramifications for what the hedge fund industry and family offices can expect from their prime brokers.
Kaylee, Sonali, go back a year ago, and at the height of the pandemic, we were hearing from people, including Nobel laureate Joseph Stiglitz, that the cascading bankruptcies we would see from businesses under lockdown would be really detrimental to the U.S. financial system. That never happened, did it? And we have seen these loan loss reserves continually released. Is that going to continue?
Yeah, that's the big question, and at what pace. But let me give you another interesting stat here. We're expected to see more than $1 billion of debt underwriting revenue over at JP Morgan. And we're not seeing the same types of rescue financings, but there's an expectation that other types of financings, M&A financings, LBO financings will come back in a bigger way. Again, those things have to come back at a breakneck speed because we've seen debt underwriting like we've never seen it before throughout the last year, which is why we didn't see those bankruptcies.
All right, Sonali Basak, Bloomberg Wall Street reporter, you're going to be a busy lady today. Thank you so much. And coming up later today, we're going to speak with Wells Fargo's CFO, Michael Semamasano. That's at 4 p.m. in New York, 9 p.m. in London. And up next, another setback for the global vaccine campaign. We discuss the latest on Johnson & Johnson with Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The FDA is the gold standard for ensuring the safety and the effectiveness of the vaccines, and today's action, I think, is clear evidence that they're taking every step necessary to ensure the American people have clear and transparent information.
We expect it to be a matter of days for this pause.
We want to get this worked out as quickly as we possibly can, and that's why you see the word pause. In other words, you want to hold off for a bit, and very well may go back to that, maybe with some conditions or maybe not.
The real thing that is so notable here is not just the cerebral venous sinus thrombosis or the thrombocytopenia. Those two things can occur. It's their occurrence together that makes a pattern, and that pattern is very, very similar to what was seen in Europe with another vaccine.
U.S. officials discussing the pause of Johnson & Johnson's single-dose COVID-19 vaccine pending a review of the development of rare blood clots in several women. For more, we're joined by Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, great to have you talk about this today. I was watching the news at home last night, and a segment about Johnson & Johnson's vaccine being paused was then followed by multiple pharmaceutical commercials in which there's a long list of side effects listed, including blood clots, sometimes fatal. Can you just explain why this vaccine is being treated differently than everyday medications approved by the FDA and marketed to consumers?
Absolutely. So, I think there's a couple of things happening here. One is that this actually demonstrates that the pause is happening out of an abundance of caution. It's a very small number of people, but it shows us that our post-vaccination monitoring system is working. So those drugs that we see on TV that are advertised, they're all approved by the FDA, and we just have to go back to the fact that this drug is available by emergency use authorization. So the FDA looked at preliminary data, and they made a determination that based on that preliminary data, it's safe enough to begin vaccination. So we use the post-vaccination monitoring system to see if anything comes up in the larger population. And the pause shows us that the data were found and that we're going to take a quick look and make sure that the vaccine continues to be safe. I do believe it'll come back online. I think they'll evaluate these cases, maybe change who has access to the vaccine or who's given the vaccine, but that the system is really working the way we want it to.
So, Lauren, when do you expect it to come back online? How long is this pause going to last? And even once it's over, if everyone says, it's okay, how big do you think the efficacy or the hesitancy question is going to be put back front and center after an episode like this?
Yeah, that's a great question. I mean, I think the pause will be a few days long while the ACIP relooks at the recommendations. Probably more data from data review from the FDA, and then they'll make a determination like, should the vaccine come back, and if so, should it be in a different population? I think the hesitancy question is hugely important. We have to do a lot of legwork around what does this mean? Does it change who gets the vaccine? Is it still safe for who's receiving it? And why did these things happen? So then a lot of science will start happening on why these cases occurred. It's 6 cases in a very specific population, relatively young women, and there may be something else about them that the FDA will explore and make a determination as to whether or not they're a particularly susceptible population.
Right,
but
there could be a
lot of work is going to
commonality.
have
For
to
example,
happen.
I wonder what you think the commonality is. There was talk yesterday about the fact that maybe birth control could be an issue. Have you heard anything about ties between the two?
Yeah, I haven't heard anything specifically, but the age of the women, that would make sense. The possibility that they have some other, related type of issue going on might also be the case. The review that's happening right now during the pause, all of that additional data that wouldn't be sort of out in the general public, because we want to also protect people's privacy and their protected health information, will be looked at through the reporting system and through their additional casework. And so that'll allow the regulators to take a look at, is it birth control? Do we need an additional warning or an additional step to protect people who are on birth control? Or maybe it's something else, and a different subset of the population will want to protect. But either way, a lot of it will come down to messaging.
Isn't it a mistake to give this kind of messaging, Lauren? I mean, if there's only 6 cases in 6.8 million, I'm already thinking, okay, I don't want my wife to get this vaccine, but I don't have a problem with her getting on a motorcycle every day, which she does, and her chances of a fatal accident there are far better than 1 in 100,000. So, aren't we sending the wrong message when we pause a vaccine for such incredibly rare cases?
I would say that it's all about the messaging, right? So it's not that we're making a mistake by pausing it. We have an incredible view into the sort of regulatory process that we as a general population didn't always take the time to look at or see in the media, right? So it's playing out in the media in ways that it didn't used to. And it's important that it is, and it's important that people see that all of the steps that were in place to protect them are being taken and are being used. So I don't think it's the wrong thing to do. I think what happens on the other side of this pause will have to be very clearly articulated, and why the next steps happen will have to be clearly articulated. But I think the pause is the right thing to do to look into the case, because if you take the time to look at this and you find something related, maybe in this vaccine alone, maybe also in the AstraZeneca vaccine, as some of those cases are very similar, then you can protect a bunch of additional people from having to go through this by limiting who gets the vaccine. And so it may feel wrong right now, but we're not great at talking about risk. And so perhaps this actually just introduces how we talk about risk into the greater sort of common conversation.
Good, very good point. We aren't great at talking about risk, which is almost ironic, since that's what we talk about here all day, financial risk. But when it comes down to lives, it's, I guess, a different conversation. Lauren Sauer, thanks so much for your time this morning of Johns Hopkins University. Later today, Fed Chair Jerome Powell speaks at the Economic Club of Washington. He'll sit down with David Rubenstein. Bloomberg has live coverage of that event at noon in New York, 5 p.m. in London. This is Bloomberg.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Coinbase is going public, but it's not just another direct listing. It's a symbol of how far crypto has come and its increasing institutional acceptance. Think about it. Bitcoin has been around since 2009, and despite sustained rallies, the mainstream basically always viewed it with extreme skepticism.
This was the biggest Ponzi scheme in human history, and it's going bust.
Bitcoin, which in our view is nothing else but a Ponzi scheme.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day.
I think it's a scam for criminals around the world.
It's an index of money laundering.
Fast forward to now, Bitcoin has more than doubled just this year, and it's up more than tenfold since its lows last March. And now with the total cryptocurrency market worth over $2 trillion, the large institutions are ready to play a role.
Bitcoin should be worth about $400,000.
Coinbase is the largest U.S. cryptocurrency exchange, and investor interest is massive. In fact, it's so big that despite being less than a decade old, the company is, by some measures, larger than established exchanges like ICE or NASDAQ.
I think that there are many that are sort of standing outside the gates, just waiting for that moment when they can have exposure to Bitcoin.
Coinbase generated revenue of $1.8 billion in the first 3 months of the year and had 56 million verified users in the quarter. The numbers don't lie. Crypto seems here to stay.
That was a look at how far crypto has come and today's Coinbase listing, what it means for the future. Let's continue that conversation with Tom Keene, co-anchor of Bloomberg Surveillance. Tom, bank earnings about to roll out in about an hour's time, but who cares? Everybody's counting down to the Coinbase debut.
Well, I think a lot of people within the industry, and you heard some of the comments here from Nora Rabini and James Dimon. It's real simple, Kaylee. There is a raging debate about this. I want to go to the chart right now. I rarely use arithmetic charts on something like this. This is a normal chart in the moonshot of Bitcoin, particularly in recent times. That is, to be fair to all, Kaylee, an unusual chart, and this is an unusual listing amid bank earnings.
Yeah, a direct listing, Tom, and we've seen some massive first-day price swings for direct listings in the past. When you layer crypto on top of that, we were just talking about this with Joe Weisenthal earlier this hour. It could be a very wild trading day for Coinbase, and I wonder how much attention that is going to pull from the other fundamentals, the earnings story, when it comes to big banks.
It's a really important question, and the answer is I don't think it means one iota. It's a really interesting transaction. It is a direct listing, which has a certain first-day mystery to it, and how they price it. But at the end of the day, it's going to be up and running. The thing to focus on here is that Coinbase has been manufactured or invented, however you want to put it, to provide regulatory legitimacy to the business. And without question, what anyone thinks about Bitcoin, Coinbase has succeeded as being a genuine platform for the business.
Yeah, you're totally right, Tom. We'll all be watching that today. Thank you so much, Tom Keene, co-anchor of Bloomberg Surveillance. And Matt, in our morning meeting this morning, we were both, talking about what we're watching today. We had the same answer. It's just Coinbase. So I guess we have to share it. We can both watch it.
Yeah, well, we can both watch Coinbase. I mean, we're both going to watch JP Morgan earnings as well. We're both going to watch Goldman Sachs. We're watching a lot. There is a lot going on today. But Coinbase, I think, really takes the spotlight. As you pointed out at the top of the program, this is what everybody is focused on today. And it's fascinating because it's not really such a huge market cap. 100 billion euros, $100 billion is a lot of money, but it's not the $500 billion that we see at JP Morgan.
Yeah, but it's worth more than the NYSE and NASDAQ. I mean, this is a pretty massive listing. And the question is, you know, do the fundamentals really back up that $100 billion valuation? And is that valuation going to get pushed up even more in this first trading day, Matt? As we've been alluding to, we have seen some pretty volatile first days for not just direct listings, IPOs too. And then, of course, as you were talking about earlier this hour, you have the retail aspect of this. And we know that they can drive a lot of volume and volatility. So it's going to be an interesting day to watch how all of this plays out. Well, coming up in the next hour, they'll have Greg Bottle, BNP Paribas head of U.S. equity and derivative strategy. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Back from the kind of shutdown we had, you were just going to end up with readings of inflation.
Unless we can get the inflation engine going on wages, I just don't think you can make a case for much higher rates.
The market focuses on the destination, and the path to get there is somewhat rocky.
2021 inflation is important. I think for markets, it's 2022 inflation that's more important still.
That's the key. Will the Fed fight inflation, contain inflation as it rises as the cycle continues?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Earnings season begins right now from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures positive 0.1% on the S&P 500. This hour, Tom Keene, JP Morgan
Up, the bank earnings. I agree with you, John. Bank earnings really have to be front and center. Simply the first picture we have of this earnings season. But John, you've got to note the print on NASDAQ 114,000. And John, I know you had a sell ticket in for 65,000 on Bitcoin. We almost got there.
I wish I had a buy ticket in a long time ago, and I think many people wish they had a buy ticket in for the banks coming into the new year. Do you want to do Coinbase right now, really?
No, I don't really. I'm just doing it to aggravate.
Lisa, randomly shouting
Lisa,
Coinbase.
Well,
I don't think Lisa's with you, Tom.
Repeat Coinbase with me here. 3, 2, 1. Coinbase.
Carry on. I'm going to let you hang here because I want to take the heat for this one. No, look, this is relevant. Let's pair these two. Let's save this and pair these two.
The only thing relevant is John got 8,000 shares.
Hold on a second. This idea of bank earnings
what is in that cup this morning?
having to do with some of the fintech, some of the emergent players, whether it's in crypto or beyond. John, come on, work with me here. This is actually relevant because this is going to be relevant to how JP Morgan and Goldman Sachs and Wells Fargo indicate what their future prospects are.
I don't agree.
I've got no idea if I can work with either of you this morning.
John, let's go earnings here.
Thanks,
JP Morgan
Tom.
and Goldman Sachs. Which one interests you the most?
JP Morgan in 45 minutes' time. I'm going straight to the price section of this morning. I have no idea what's going on this program. Equity futures look like this on the S&P 500, up around about 3 points. We advance about 1/10%. There's a big picture of me. Hopefully we can get to the price section. There it is. What is happening today?
Your
Honestly,
put that in.
Can we rewind 2 minutes and just start again? Is everyone with us today? Are we in there? Are we in the control room? Is Tom present? Is Tom sober? In the bond market, yields are higher by a couple of basis points, 163.59. Lisa, save the show.
All right, today we are expecting earnings. Let's talk about them. JP Morgan kicking off earnings, as you said, John, in about 45 minutes' time. They were going to be getting Goldman Sachs and Wells Fargo, among others. This is basically going to kick off the whole week. People are going to be looking to the deal makers to really win, with Mike Mayo coming out and really saying Goldman Sachs could stand to benefit the most from that surge in M&A that we've seen. 12 p.m., the Fed's Jay Powell going to be speaking along with a host of other Fed speak. Today he's going to be at the Washington Economics Club speaking with our own David Rubenstein. He's, of course, the co-founder of Carlyle, but he does host Peer-to-Peer on Bloomberg Television. Interesting to see what he has to say about the vaccination schedule and how that affects their tapering. And then today, a CDC's panel is going to be meeting on distribution of the J&J vaccine. You know, as we research more, it seems like this is less likely to have an impact on the vaccinations in the United States, but more in the distribution around the world, given the marginal production for some of the developing markets. John.
Lisa, thank you so much. I hope Greg Battle is with us from BNP Paribas so we can have a sensible conversation to kick things off this morning. Greg, are you there, sir? Be great to catch up on earnings a little bit later. Good luck to you for the next 5 minutes. What are you looking for from earnings season in the next couple of weeks?
Well, it's going to be a really interesting one because we've had such a macro-driven environment, and we're now at a point where we can get to talking a little bit more about some of the rotation or relative value opportunities within the equity space. And we hit earnings season at a really interesting time with markets at all-time highs, the VIX having come in considerably in recent weeks. So I think expectations are pretty high. There's a high bar to meet for earnings, but I think there's potential for some decent pockets of outperformance.
Greg, it's often about the outlook as well, and it comes down to margins, to cost, to hiring. A lot of people trying to figure out and get a little bit more clarity from some of these companies. What are you looking for specifically from the outlook?
Yeah, really, it's guidance. There's been some very lofty expectations. We're obviously going to have very strong earnings growth this year, but the question is more when we get to 2022. Is there scope for further upgrades? I think there's certain sectors that we're looking at in particular. We're due a retail sales print Thursday this week that's likely to be extremely strong. So looking at the guidance from some of the consumer discretionary sectors would be interesting. The semiconductor sector is one that's been talked an awful lot about. Supply shortages. Is that going to manifest itself in more bullish guidance? Or do we expect to see strong volumes, pricing power in that sector? I think these are the type of things we'll be focused on this quarter.
Greg, to dovetail the news flow in, and you know, folks, we're making jokes about Coinbase and all that, but I do agree with John that the earnings season here is profoundly important. And Greg, as you mentioned, on a micro basis, the derivative dynamics that you study, as if you were speaking now to James Dimon, Mr. Solomon, the leadership of Wells Fargo, would you suggest that it shows a frothiness, a bubble, an asset expansion like we witness in the price of Bitcoin?
I don't think in the equity market space we necessarily see that. If anything, what we've seen is a little bit more of a normalization in the volatility environment over the last month. We had a very, very strong equity market for the last 6 to 9 months, but it hadn't really been reflected in the volatility space. We still had a VIX above 20, which showed maybe there was something going on under the surface. But over the last month, we've had a really big normalization in the volatility space, which looks a bit more like a classic kind of mid-cycle bull market to me than an end-of-cycle kind of frothy derivative space.
The chart is as shocking on radio as it is on TV, John, in the sense that I've never seen that chart. I've never seen the hyperbolic characteristics. There's a way that you engineer a parabola. I've never seen that chart, John Farrow.
That's a lot of capitulation right there in that chart. And Lisa, I think there's a big conversation now on what the ultimate inflation hedge is through 2021, and it's certainly not been gold so far. And I just wonder how conditioned people become by that as we have this conversation about inflation, and it's this that outperforms. It's not gold. It's not the traditional asset you'd expect to outperform in that environment.
Yeah, and there's this idea of a debasement of the currency and how do you hedge against that macro environment. Greg, a real question here as we take a look at the banks and how they look at the risk building up in markets. Do you expect to hear anything, or have you seen in the derivatives action underpinning the market any pullback in leverage, pullback in risk taking following the Archegos situation, and banks perhaps adjusting some of their risk?
What we saw in the equity market in terms of risk appetite was just a very short-term impact. There doesn't appear to be any real follow-through as yet evident in the price action or the data that we look at around the equity space. But invariably, it's something that's going to raise question marks around how risks are managed, how much leverage is in the system. And I think that's something that is bound to be a topic that comes up on some of these earnings calls. But I do think at this stage in the cycle, we're really at an inflection point, and there's such strong expectations for macro growth that I do think the earnings season is going to be dominated less by some of those structural factors and more by where we are in the cycle and whether some of these lofty expectations for earnings growth this year and next year can be met or indeed beaten.
So, Greg, just talking about the earnings we're expecting in the next 3 hours, what are you looking for on the earnings calls to signify whether people are overpricing or underpricing earnings for this season?
So I think I'm going to be focused much less on the beat-miss numbers, whether this quarter's been better or worse than expected. And it's much more evidence from the commentary from some of the calls that accompany these earnings releases as to whether the firms are able to guide analysts for the balance of this year and next year, whether we think that this kind of cyclical recovery that we're going to see is going to manifest itself in a more sustainable earnings growth.
This is profoundly important, Greg. You're going to be on conference calls, and in the old days, it was 35 and 40 numbing conference calls. Folks, it's really romantic until the 7th call and you doze off into your cup of coffee. Greg, we're going to be on these conference calls, and essentially you've got corporate officers gaming out a boom economy. Is there any evidence they can do that?
Well, I think that one of the things that we're going to see as we move to the second half of this year is that some may be able to better than others. And I think one of the things we're really looking for in this earnings season is stories of differentiation. We've obviously had a lot of rotation between value and growth, but I think over the last month or so, we've started to see some more nuanced trades develop where things are not being driven just by broad factors, broad beta. And I think there are going to be more idiosyncratic stories here. Some stocks, even within a sector, are going to be able to beat those lofty expectations, whereas some may guide more conservatively. And I think that's going to create some RV opportunities either on a subsector level or a single stock level.
Greg, always good to catch up, sir. Good to hear from you. Greg Battle there, BNP Paribas US Head of Equity and Derivative Strategy. Use of cash is going to be an interesting one. In the Bank of America Fund Manager Survey, repeatedly now over the last several months, there's been this massive call for capex and not buybacks. That's a big change, Tom. CapEx and not buybacks. That's actually what investors are calling for companies to do.
We will see it on a use of cash basis on these conference calls, John. You can divide it up in there, and CapEx is definitely in there. And frankly, you can do all of them at once. To me, it's a massive, massive mystery because, again, we've never been here. And I don't mean Bitcoin and the Coinbase thing and all that. I'm talking, John, about the basic boom economy that we're seeing. I mean, today we've got import price index out. Do I ever look at that? Once in a while, John Writing forces me to look at that, but the answer is no. And yet today it's really interesting is another tea leaf about a boom economy.
JP Morgan in 35 minutes time, Lisa, and I think the buzzword around the banks today, reserve release on a better economy.
We're going to see a lot of that?
Yeah, and frankly, the Fed is more willing to let them release some of these reserves. The question is how much risk do they continue to see in the economy? Are they going to fully capitulate to the view of their economists, or are they going to hold out and say that there still are risks, echoing Fed Chair Jay Powell?
And will loan growth actually pick up? These are the kind of conversations we've got to have this morning around the banks after we've had a huge rally through Q1. We've had a move of about 25% on the KBW, the most watched bank index out there, Tom, in the minds of many. The KBW Banks Index has had a great start to the year, but these kind of trades have started to stall out more recently. We talked about that beyond the banks. We've seen that in, say, the Russell. We've seen it in copper. We've seen it in crude. We've seen a stall in some of that cyclical trade.
I mean, I haven't looked at Credit Suisse, but Deutsche Bank's book value, and you normalize this, folks, on the Bloomberg under the BQ function, 0.39 on Deutsche Bank. The disparity of valuation off book value, John, is there. And of course, we're leading first with JP Morgan is a sterling event. Remember, there's the call, there's the research call, there's lots of calls with James Dimon.
And then there's Archegos, which we need to discuss too. Credit Suisse.
Did you see that trade?
This is the lead story on the Bloomberg this morning, guys.
I think they
most
got
read.
A big one.
Still
Coinbase
unwinding.
may save them.
Yep.
I don't think it will. $2 billion.
Did you really get 8,000 shares, Tom? You are magic.
Tom, you're not going to have a chat in just a moment. From New York City this morning, good morning, alongside Tom Keene and Lisa Bravis. I'm Jonathan Ferro. You want a hot mic in this break, that's for sure. Equity futures up a tenth of 1% on the S&P. This is Bloomberg.
Uh-oh.
With the first word news, I'm Rishika Gupta. Bloomberg's learned that by the 20th anniversary of 9/11, the Biden administration plans to withdraw U.S. troops from Afghanistan. The terrorist attacks led to the American invasion that ousted the country's Taliban leadership. The new deadline means the U.S. will leave a few thousand troops in Afghanistan past a May 1st target set up by the Trump administration last year. The European Union's unveiled its blueprint to raise nearly $1 trillion of debt over 5 years. It will use the money to fund its recovery from the coronavirus pandemic. Almost a third of the money will